Right, good morning, everyone. We are delighted to welcome you to the first large-scale hybrid event of the EU Blockchain Observatory and Forum since 2020. We hope this will be a productive meeting for everyone. And to kick off the meeting, we will have the pleasure to introduce Mr. Pierre Maro from DG Connect for a short welcome speech.
Yes, many thanks. Good morning, everyone. I hope that you hear me well. It's indeed an honor and a pleasure to welcome you for this workshop of the European Observatory and Forum. I mean, it's a real pleasure to have people in the room, to be able to have, let's say, this hybrid meeting with also the natural interaction. It is something which have been difficult during the life of this initiative, but this is something that we are pleased to be able to do now, even if we have to be prudent. But with the COVID, but let's hope that in the following part of the year and for the next year, we can multiply this type of event, combining online and physical presence. So I would like to start by thanking all the participants, all the speakers and panelists, starting in particular by Eva Kaili, Vice President of the European Parliament. There is no need for me to introduce Eva Kaili. She's really an inspiring and also very supportive person for the blockchain communities in Europe and beyond. I have also the pleasure to welcome Nena Dukozov from the Slovenian government. Nena is playing also a very important role in the European Blockchain Partnership. She's also present in the eIDAS government advisory body, so it's really also very supportive actors in this blockchain ecosystem. So I would like to thank also all the other panelists. It will be too long for me to name all of them, but many thanks for your contribution to this event. And of course, I would like to thank the team of the European Blockchain Observatory and Forum and all my colleagues who have helped to make this event possible today in this hybrid format. So about the activities of the European Blockchain Observatory and Forum, I mean, you know that it is an initiative that we launched already in 2018. We have a new team in place since 2020, and they have done a very good or even excellent work in order to convene different expertise coming from different horizons, from the industry, from the academic world, but as expert or also from the public sector side. They have contributed to not only to organize a debate on blockchain for what concern the traditional and let's say very often known activities for blockchain in the financial sectors, but they have also helped to open a lot of perspective and to clarify why blockchain can be extremely helpful in other sectors, for instance, in the health sector or in the energy sector. So they have produced various reports. They have organized different workshops. There is now 6 reports which have been published by the Observatory and Forum, and I invite all of you to consult them, and you will find a lot of in-depth analysis that will help you to understand what is at stake around this technology and their application. So today we have a very fascinating agenda for all of you, which is organized around the blockchain ecosystem. What could be the introduction of DLTs and blockchain for digital identity, and also what could be the role of blockchain in the metaverse. So it's particularly important to address those aspects today. I would like to thank you, my colleagues, in particular from in charge of the eIDAS regulation, who also participate in this discussion, and all the other experts. My final word is to remind that the European Commission is really deploying different type of activities in order to support the blockchain ecosystem in Europe. So it starts from the discussion that we have today with the Observatory Blockchain and Forum, which is a very important tool for continue this debate and to understand what are the elements to take into account in driving our policies initiatives. We have, of course, the support of the ecosystem, which is done via the European Blockchain Partnership, in particular through this initiative, which is called the European Blockchain Service Infrastructure, and it is our intention with the member state and the other countries associated to the partnership also to launch new initiatives and to be able to scale up this partnership in view to support the ecosystem through the blockchain service infrastructure, but also other elements that could be related to that. So we hope that we can leverage on the new instrument that will be provided at the European level in order to reach another stage for this joint collaboration between all the member states and other associated countries and the European Commission. It's also important for us to continue to provide for more legal certainty, and there are different actions which have created a lot of debate within the blockchain communities and beyond. I'm thinking in particular about the MiCA regulation, but it's important for Europe to play in this driving role in order to provide for more legal certainty. Along this line, it is also our intention to launch before the end of the year the EU regulatory blockchain sandbox, where we count also on the cooperation with member states in order to establish and to reinforce the constructive dialogue between the different actors of the blockchain communities and the different regulators of public authorities in all the member states. So with that, I would like to conclude my short introduction. I would like to wish you a very good workshop today. I mean, I think, as I said before, the topics that will be debated are very important. And I take the opportunity to thank you, all of you, for your participation, in particular the panelists and the speakers. And I'm pleased to pass the floor to for the next intervention. Many thanks to all of you, and have a good event today.
Thank you for the welcome speech, and I'd like to ask our director, Tonya Dambaraki, to introduce the event and say a few words about what we do at the observatory.
Thanks, Mariana. Good morning, everyone. Thank you very much for coming here, and for those of you that have registered to attend the event virtually, thank you also for watching this on live stream. It's a great pleasure after almost 2 years to have the opportunity to put a face next to the name that we are used to working with all the people that are part of our panel, part of our ecosystem in Europe, working on blockchain. From my side, I am very happy to be here and to have the opportunity to meet you and to have this interesting agenda today with a lot of interesting panelists and representatives of the industry, academia, and policy making. So I won't delay any further. I will give the floor to the first presentation of the day to discuss the EU blockchain ecosystem developments based on the work that we normally do on the observatory, focused on the ecosystem. I wish that you all enjoy the event today, and we are very pleased to have you on board. Thank you.
All right. Next on the agenda is a presentation by Lambis Dionysopoulos, as Tonya said, about the upcoming EU Blockchain Ecosystem Development Report. So, Lambi, the floor is yours.
Thank you so much, Mariana. Thank you, everyone. Hello, my name is Lambis. I am a researcher at the European Blockchain Observatory and Forum and the Institute for the Future at the University of Nicosia. And I am very excited to present you our work on measuring the size and growth of the European blockchain ecosystem. As some of you know, UBOF has produced several reports in a number of areas. We have 6 in-depth studies, as mentioned in the introduction, in topics ranging from CBDCs and DeFi to blockchain and energy efficiency. We have 15 trend reports monitoring the latest developments, and we have hosted 20 workshops with hundreds of participants and panelists from all over the world. And of course, we have many more in the making. Today, however, I would like to present you with what we consider one of our flagship reports, which is our analysis on the state of the blockchain ecosystem in Europe. Here is our agenda. I will start by explaining the motivation, scope, and methodology behind the report. I will showcase some of its key findings, and finally, I will discuss how the ecosystem in Europe evolved over the last 2 years. So let's get started with a little bit of history. When we first became responsible for UBOF, we realized that if we wanted to measure the success and impact of blockchain, as well as the effectiveness of regulation, we needed a reference report on the state of blockchain and cryptocurrencies. Back then, there was nothing that presented the state in Europe holistically. So in 2020, we set out to create our own by analyzing 29 countries, with that number consisting of the 27 EU member states plus Switzerland and the UK. This year, we expanded on this analysis with the follow-up study, which also included Liechtenstein and Norway, in addition to updating our previous findings. Really, we wanted to showcase three things: how the state of the ecosystem in each of those countries, how countries compared with one another, so the state of the ecosystem in Europe in general, and how the situation evolved between 2020 and 2022. And let's see how we did this in greater detail. So for each country, we produced a fact sheet that went over its general characteristics, key policy and regulatory developments, education, research initiatives, and user communities, as well as the national entrepreneurial environment, including the number and size of blockchain businesses, as well as the amount of funding. And finally, each of those 31 or 29 fact sheets respectively included an interview with experts where we discussed the findings of the report as well as future prospects. And we followed this approach both in 2020 as well as in 2022 to ensure that our findings and our reports are comparable. So this is level one of the analysis, what happened in each country. For level two, we compared European countries with one another in terms of their regulatory and wider ecosystem maturities. And in the latest iteration, in level 3 in 2022, we showcased how the ecosystem evolved based on a framework that I will explain to you in a while. Now, I would like to present you with some of our key findings for 2020, and I will also draw comparisons to our previous report, starting with the size of the blockchain industry. So we identified approximately 4,000 blockchain or cryptocurrency businesses. This number is up from approximately 3,000 in 2020. And the most striking finding here is that those companies are roughly equally split, with 50% of them being within the union and 47% of them outside of the union. And those numbers are up from 49% in the case of the union and down from 51% in the case of countries outside of the union. We also observed a very high concentration of blockchain companies in countries with established ecosystems. So this means that Switzerland, the UK, Germany, the Netherlands, and France are home to most blockchain and crypto companies, and this is overall. Even within Europe, this is also true. There is a group of countries, including Germany, the Netherlands, France, Estonia, and Spain, that host the majority of companies. This graph that you can see on your screen, however, does not take into account the fact that we are talking about countries of different sizes, and in certain cases, such as the case of Estonia and Spain, that have virtually the same number of companies, of vastly different sizes. We can see a clearer picture when presenting the data on a per capita distribution, or per 100,000 population. And here we can see countries from the Union emerge to the top. We have Estonia, we have Malta, Luxembourg, and to a lesser extent, even Cyprus. And with that, this is an eagle's eye overview, our analysis on the number of blockchain companies in Europe. A similar state is also true when it comes to the funds raised by blockchain and cryptocurrency businesses. We estimate that they collectively, those 31 countries, raised 13 billion euros through a combination of traditional forms of financing, such as VC funding, as well as alternative forms of financing, such as ICOs, STOs, or other forms of blockchain. This is up from 7.5 billion in 2020, by the way. Again, if we look at the data by total funds raised, there is a high number of, there's high concentration. The top 5 countries account for 82% of the total funds raised in all of the 31 countries we analyzed. And a similar case was true for the previous iteration of the report as well. On a per capita distribution, we see some countries from the Union emerge, such as Malta, Estonia, Cyprus, and to a lesser extent, the Netherlands. And this is again an eagle's eye overview of the state of funding, of blockchain funding in Europe. Lastly, I want to take a moment and talk about academic initiatives where I'm extremely proud to report that Europe is a definitive global leader. The first postgraduate program in blockchain and digital currencies was introduced in 2013 by the University of Nicosia. Since then, we have a total of 18 postgraduate programs in 11 countries. Spain here is the global leader with no less than 8 programs offered by Spanish universities, and we have many academic certificates and professional qualification courses, most of them concentrated in the UK, Spain, and Greece. And you can see to the right of your screen how those numbers of the postgraduate programs evolved over the years. And with this, this sums up the main quantitative areas that we touched upon in the fact sheets that we produced. And I would now like to move forward to some more qualitative areas, if you will. So after collecting all this information, we wanted to create a framework for assessing where each country stands in relation to the other in terms of its regulatory maturity, as well as the maturity of its wider ecosystem. So starting with regulation, we organize countries in 3 stages. In stage 1, we put countries with no blockchain or crypto-specific regulation. This is at the national level. In stage 2, we put countries with regulation that pertains to parts of the ecosystem, again, at the national level. And finally, in stage 3, we put countries with broader initiatives, such as national strategies that pertain to blockchain and cryptocurrencies. And here's a distribution. We have 11 countries in stage 1, 12 countries in stage 2, and 8 countries in stage 3. And we will see what those countries are in just a moment. So this is what we did for regulation. We followed a similar approach with regard to the maturity of the ecosystem, but we looked at this on the basis of 3 indicators. First, how strong the business ecosystem is. Second, how active and engaged are the user communities. And finally, we also measured the quality and quantity of academic initiative in each country. And again, we have 3 stages depending on how the above are satisfied. 8 countries in stage 1, 14 countries in stage 2, 9 countries in stage 3. Putting everything together, we have the main finding of the report that synthesizes the 2 curves, the regulatory and the ecosystem maturity curve, in a unified framework for assessing where each country stands in relation to the other. So countries that fall in stage 1 in ecosystem and regulatory maturity are in stage 1. This includes the likes of Croatia, Czech Republic, Greece, Hungary, Romania, and Norway. Countries that fall under stage 2 in either or both maturities, so either ecosystem or regulatory maturity, are in stage 2. This includes the likes of Austria, Liechtenstein, Finland, Poland, Denmark, and more. And finally, countries that fall under stage 3 in either or both ecosystem or regulatory maturity are in stage 3. At the top right, you can see Cyprus, UK, Estonia, Switzerland, France, Malta, Germany, Netherlands, and many more. I want to take a moment to comment on this framework. This is, of course, not definitive. The boundaries between the categories, between the stages, are very porous, so they're very open. and all countries started in stage 1, and we gradually expect them to move to stages 2 and stages 3 as blockchain regulation for blockchain becomes clearer and more universal, and as blockchain and cryptocurrencies become more mainstream option for entrepreneurs. So this is the state now, and we'll see what I was talking about here. So comparing it with our previous report, in total, we have 3 countries, Belgium, Bulgaria, and Slovakia, that moved from stage 1 to stage 2. We have Finland, which improved its position in stage 2, and the UK, as well as France, improved their position in stage 3. And this goes back to what I was saying about the stages being porous and seeing a lot of mobility, especially in the earlier stages, stages 1, moving to stage 2, etc. Now, let's see what we have learned about how the ecosystem evolved in Europe in the last 2 years. Of course, the ecosystem is growing fast and is growing fueled by both top-down as well as bottom-up initiatives. Mr. Pierre Marot mentioned some top-down initiatives. We have the European Blockchain Partnership, EBP, EBSI, the famous MiCA set to take effect in 2024, and of course, the Sandboxing Initiative. This is coupled with bottom-up initiatives, industry, academic, and user-driven ecosystems. Countries from the Union were particularly quick to improve their position in the last 2 years. You can see below in the total funds raised, as well as in the number of blockchain companies, we have growth rates that in certain cases are in the hundreds or even thousands. And I would now like to take this opportunity to discuss some specific factors that contributed to this growth, as well as what we can learn from that. So not all countries are on the same level of maturity. There is growing momentum everywhere. The first factor that contributed to growth was first mover and quick mover advantage. And this is especially evident in countries such as Malta, Estonia, Cyprus, small countries that embraced blockchain as to differentiate themselves, and they were able to reap the benefits. This is also true to a lesser extent in the UK as well as Germany. So this is the first factor that contributed to growth. Another important factor is, of course, regulatory certainty at the national level first and then at the European level. We've seen this to be especially true in countries that established blockchain and crypto-specific regulation as well as specific provisions and frameworks. This is true for Malta, Estonia, Switzerland, Luxembourg, and now we're seeing more and more countries joining, such as Cyprus and many more. State support is extremely important, which manifests through a national strategy, as those we've seen in Germany and Cyprus, as well as public sector pilots, which were the case in Estonia and Austria. And of course, we cannot underestimate having an established ecosystem in finance, banking, or similar sectors that can produce lots of positive synergies for the rest of blockchain, as we can see in the case of Switzerland or the UK, an example. EU regulation is particularly important and will become increasingly important for eliminating discrepancies between countries and eliminating regulatory geographical arbitrage. And we are already starting to see the effect of regulators moving towards wider umbrella regulation. It is also worth mentioning that EU regulation has spillover effects to the rest of the continent as well as the rest of the world. And as a result, I truly believe that Europe is uniquely positioned to positively influence the development in the space. And I would like to leave you with this, because we don't have too much time, noting that those factors and EU-wide regulation in particular can serve as a playbook for navigating other critical paradigm shifts, such as DeFi, such as Web3, and such as an open metaverse that we really need. And I'm fairly optimistic that Europe will play an important role in those as well. On behalf of the colleagues at UBOF and at the University of Nicosia, thank you so much for being here.
Thank you, Lambis. Our next panel is also focused on EU blockchain ecosystem developments. And we're pleased to welcome Professor Sula Luca from the University of Nicosia, who will moderate the panel. Professor Luca.
Good morning, everyone. To all who have joined us online today across Europe, and welcome to our panel discussion on the blockchain ecosystem and development. Following the impressive results that Lambis has just presented on the EU blockchain ecosystem, it's my pleasure to welcome our panelists, key players in the European blockchain ecosystem. First, we have Nena Duguzov from MVP, representative of the Slovenian government, Mark Taverner from Blue Sphere Solutions, and Joshua Elal from the University of Malta. Unfortunately, Eva Kaili, member of the European Parliament, that I'm sure all of you know her, could not make it live today, but she has sent a pre-recording. So we will be hearing that soon. Even though that this is a topic that we could be discussing for many hours, time is limited. So I will give the floor right away to our panelists to briefly introduce themselves and their role in the EU blockchain ecosystem. So beginning with Nena. We cannot hear you. At least I cannot. Nena, I cannot hear you. I don't know about the rest. Mariana, can you hear me?
We can hear you, Sula.
Okay. Can you hear Nena also?
No.
Okay, until Nena fixes the technical problems, then let's move to then. Joshua?
Good morning, everyone. So thank you for having us here. Is it just an introduction for now, Sula?
Yeah, just an introduction and your role in the blockchain ecosystem in Europe.
Yep. So I'm the director for the Center for DLT at the University of Malta. We run a multidisciplinary master's in blockchain and DLT. And I would say that's my main role inside of the blockchain ecosystem. Thanks, Eva.
Thank you, Joshua. Mark, could you please introduce yourself?
Thank you. Let's give it a go. So with a little bit of echo, you get to hear me twice, which is great. I'm Mark Taverner. I've been in the blockchain space since 2013-14, originally with a company called Bitfury, who I believe are a proud member of the Observatory and Forum, and then more lately with INATBA. I see some colleagues over there, and I see some members in the audience as well. And now I'm an angel investor in blockchain companies, principally focused on identity and the intersection of sport, AI, and blockchain.
Thank you, Mark. Nena, can we hear you now? No.
I will move to another space, okay?
Actually, we can hear you now. Well,
can you hear me now?
Yes, we can.
Okay, perfect. I'm going to move to another space so that you can hear me better. Yes, I'm Nena Duguzov. I'm from the Slovenian Ministry of Economic Development and Technology, and also I'm a member of the European Blockchain Partnership. And with this policy group, of course, and with this, we are very active on development of the blockchain ecosystem, cooperating with European Blockchain Observatory and Forum, and also with the other international organizations in Europe and worldwide, like in ADVA or the other organizations. This would be for the beginning.
Thank you. Thank you, Nena. Now, please, let's play the recording by Eva, if we can, please. No sound again.
Dear panelists, would like to begin by thanking the Institute for the Future of the University of Nicosia and the European Blockchain Observatory and Forum, inviting me to this wonderful event, discussing with friends, Mark Taverner, and of course Sula, for keywords in discussion might have been tense, but basically the potential uses to less than 1% of the population. And the early adopters are usually very young. I would say 50% is less than 50 years old, 30% less than 30 years old, and have already adopted blockchain. It could be as a very interesting technology and attractive to young people because of its philosophy of decentralization and trust. We try to regulate it with flexibility in Europe to create more legal certainty in order to have broader adoption. So we have 3 files basically, the DLT, the MICA, and also TFR. I worked on the DLT pilot regime, and I would say we succeeded to put a sandbox to new entrants that want to be licensed and test the DLT in financial markets for 5 years before they act in a huge 500 million people and allow all sorts of DLTs to be deployed, respecting tech neutrality. I think is banned and providing the first ever opportunity to physical persons to invest in DLT financial instruments by directly accessing the financial market infrastructure without intermediation. Thirdly, we managed to implement higher thresholds that will attract in DLT infrastructure. Now, for the transfer of funds regulation and also the MiCA regulation, we reached also a provisional agreement just a few days ago. Under the new MiCA rules, the stable coins, the asset reference tokens, and the e-money ones, they will be required to maintain adequate reserves to meet the redemption request in the event of mass withdrawals. We want to avoid failures like the ones we saw recently. And those that become too large, they might be limited to 200 million euros in transactions per day. The European crypto market robustness will be enhanced by giving ESMA, the European Securities and Markets Authority, more powers to step in and ban or restrict crypto platforms if they don't protect investors or if they threaten market integrity and financial stability. Now, the environmental they have been widely discussed. I would say we succeeded.
Okay, because of the video quality is very bad, we'll try to fix it and play the remaining at the end of the panel.
Hello, can you hear me now, myself? Thank you, Mariana. Let's move then directly to our panelists that we have online or in Brussels with us. So, Nena, I will direct the first question to you, please. What do you think are the most important milestones that the European Blockchain Partnership has achieved over the past 2 years?
Yeah, when I got, maybe not over the past 2 years only, but maybe if we go a little bit back to the history to 2018, and when I got that question in advance, I started to think how many things were actually achieved here within European Blockchain Partnership. For example, the whole thing started with European Blockchain Observatory and Forum. It was the first initiative that was created by the proposal from the European Commission and also the ecosystem in Europe. It was in 2018. And then the European Commission actually adopted the declaration, and that declaration was the foundation or the base for starting with the European Blockchain Partnership. It was a very important milestone in April 2018 and a very brave step towards the development of the blockchain ecosystem and the technology and the use cases that we are developing here at the Blockchain Partnership. In June or July 2018, the decision was adopted to start to develop EBSI, so European Blockchain Services Infrastructure, and also the three main use cases were defined. First was SSI, so self-sovereign identity. We all agreed that this is the most important use case that we need to have all over Europe. And then to be interoperable and to facilitate the transactions, the communication, and everything else. After that, diploma use case, it was also a very important use case which has been developed in the recent years. And also we had a notarization use case. It was for traceability of the documents. After that, we formed a kind of technical working group, and we started to develop also with the cooperation with the experts from different member states, either EPSI and the use cases. I have to say that one of the most advanced step was the launching of PCP. We know that in Europe we have innovative procurement or procurement of innovative solutions, but if you go and read the guidelines of the European Commission for the procurement of innovative solution, there you will see the case of pre-commercial procurement for EPSI launched by European Commission. Then in 2019, there was one other important milestone, and we adopted a mission statement with which the governance system of the European Blockchain Partnership was defined. And the very important thing was implemented. So the co-chairmanship between the Commission and the member state. And the principle and also for sure the structure was defined so that we institutionalized that happening around EPSI and around use cases in within EBP. Actually, it was agreed that trio of the presidency of member states to the Council of EU will co-chair also the EBP or European Blockchain Partnership together with the Commission. And with this, we created really unique network, really unique partnership. It's very different from other working groups in the Commission, but it's, I have to say, it's on very high quality level. So, I'm sorry. Then the mission statement pointed out that the sharing of experiences enable to close policy and regulatory cooperation between member states and the European blockchain ecosystem, strengthening the compliance with the regulations and so on. I have to say that during the presidency trio of Germany, Portugal and Slovenia, we adopted a non-paper. Non-paper was the document that defined the governance structure and the tasks of each specific group within the EPSI in the EBP. And the governance structure today is composed like this. First, we have European Blockchain Partnership Policy Group. The representatives of member states are members of that policy group. Then we have a technical EPSI technical group. We meet. We have quarterly meetings, and we discuss the things that are important for blockchain development and blockchain ecosystem also in Europe. Then we have use case groups, and the conveners are inevitable part of our groups, so that they are a very valuable contribution to the knowledge and to experience that we get from use case groups. Besides that, we have a task force. It is temporary based, but also very valuable, as it focuses into some important things like, for example, defining the statute of observer, defining the future roadmap for future activities, and so on. I need to say that we also adopted a statute of observer. So how can other countries that are not member states, how can they participate in our EBP policy group? What would be the approach, how to accept them? And I have to say that first we started to with this communication with Ukraine, which we considered very important. Now, when a debt call is launched, and there are the preparation of different use cases and also upgrading of EPSI nodes, it is also very important thing done by the European Commission, and I need to say very good words to and about the cooperation with the Commission, with Pierre, with Helen, and other colleagues from the Commission. And I need to say that it's very valuable partnership that can be or need to be further further developed in the future. Thank you very much for now, and I hope we will have a chance to say something more in the continuation.
Thank you, Nena. Joshua or Mark, would you like to add anything on what Nena has already mentioned on the milestones, or shall we move to the next question that I have here?
I'll just add a few remarks from the time that I've been working with EBP, colleagues in the Commission, Eva and many other parliamentarians, and my good colleagues at INATBA, that the volume of work that's been undertaken has been tremendous, and the size of the task at hand is really quite challenging. Bringing together 27 member states, plus 3 additional participants, if you widen it out to the European Economic Activity Area, is around matters of policy and strategy is no mean feat. And I'd just like to recognize the work that's been done by the EBP, colleagues in the Commission, here in the Observatory and Forum, and of course INATBA, who I had the great pleasure of spending some time with.
Thank you, Mark. Joshua, anything on the same topic?
Nothing more to add.
Okay, thank you. Then I will move to another question for you then, Joshua. What do you think are the necessary skills for blockchain, and what is the demand around these skills?
Yeah, so often when we think about the skills required in this space, people immediately go to the technology requirements. We need to create smart contracts, we need coders. And yes, undoubtedly that is there. But when we think about blockchain, smart contracts, crypto, DLT, we're talking about a much wider spectrum. We're talking about smart contracts that are being used in financial applications. We're talking about smart contracts that could be law. So we need lawyers as well in the mix. And really, we're bringing together a number of different professions, disciplines, from computer science, law, business, finance, economics, management. It's really across the board. And the thing is, we can't have these different disciplines working in their silos, because we need to overcome the educational gap and the discipline gap that exists between these different disciplines. So we need to think about new types of educational programs where our programmers are not just versed in programming and tech, but they understand the regulatory frameworks that they're operating in, where our lawyers have an understanding of the technology so that they can communicate and have fruitful discussions with the programmers. And the same goes for business and finance. So I think where we are at, and as Lambis showed in the previous presentation, there's been a lot of development in the educational sector in Europe, specifically focused on blockchain, and we're doing very well when it comes to postgraduate degrees, when it comes to graduate degrees. I think where we are lacking is on awareness in general, public awareness, and what does blockchain, what does decentralization mean to the non-graduate and undergraduate students. So I think that's really the state of affairs. We are in a very good position in Europe, but we now need to think about the wider audience. And to be quite honest, maybe we shouldn't even be talking about blockchain when we're talking about the wider audience. We should be talking about what does the future internet look like? How will a user out there use these types of technologies? I don't even want my my mom to think about blockchain anymore. We need to have technology that is grandma friendly, and the skill sets that we need are beyond the traditional computer science, tech, business, finance, law. Beyond that, the skill sets that we need are the ability to work in multidisciplinary teams. I think that is really key to getting where we want to get in this new decentralized web.
Thank you, Mark. I absolutely agree with you also on this topic. You know, coming also myself from the academic sector, we do need interdisciplinarity in this area. And also, as very well you mentioned, awareness and user-friendly applications that anybody, any grandma and grandpa can use. So I will be moving now to Mark. Mark, what do you think are the key characteristics of this EU business blockchain environment that we're all working on right now, you know, coming from various areas?
So thank you for the question. I want to go back to 2017, when I had the great pleasure of talking about blockchain in the European Parliament alongside Eva Kaili. And just as a little segue, some of you might have heard me talk about this before, others of you will question the scientific merits of what I'm about to say, but it's just an analogy. Who knows the best way to kill a frog? Nobody? You put it in a pan of cold water, you put it on the gas, and you slowly heat the water up, and the frog will sit there and die because it doesn't recognize its environment is changing. Now, back in 2017, I used the same analogy inside the European Parliament as a warning call that Europe had the opportunity to seize a leadership position for blockchain and AI technologies, but was in danger of losing out to China. Just today, as I was traveling here, I read that China has launched an enormous fund to pour into frontier technologies, AI, blockchain, call it whatever you will. We might refer to it as Web3. So the characteristics that I would like to see in European ecosystems are speed, access to finance, and a very clear regulatory framework. And as I look around Europe at the moment, I see, despite MiCA and the Transfer of Funds regulation, and to a certain extent, the Data Act, and all of these great tools, I see that there is still a huge amount of possibility for arbitrage. In fact, I noted that the ECB at its, I think it was its chairing committee last week, wanted to send a warning to member states about the risk of fragmentation, even though MiCA, at least at level 1, has been agreed. We're still maybe 24 months away from seeing MiCA be enforced. And that's before we start talking about MiCA 2, which is coming up very quickly. And let's hope that's not another 5-6 year process that might overshadow MiCA 1. But if we're going to get to a point where there are aggregated powerhouses in Europe, then we need the Frances, we need the Germanys within the European Union to stop competing so much with each other, to try and build unicorns and to think about how they can better support the ecosystem. I was looking at some data from CB Insights, if any of you are familiar with that particular monitoring firm. And whilst my data differs a little to the data from the Observatory and Forum, I think the general trend is the same. In the USA, there were about 1,900 blockchain companies that CB Insights has been monitoring. In Europe, just under 900. The most worrying fact for me was not almost the double difference. It was the fact that when you look at the funding that was flowing into the blockchain companies, it almost exclusively is coming from the US, whether you're European based or whether you're US based. In fact, of the top 5 funders on those nearly 900 European companies, only one funder was European based. The other 4 of the top 5 I saw were coming from the US. So whilst France was very early with Pact, and I think that's a great piece of regulation, which had a trick missed in it by Europe to facilitate access to banking for blockchain companies. I really like that in Pact, and I was very sad to see that it wasn't picked up in MiCA or other pieces of regulation. I think that was great, but they still haven't managed to capture the imagination of the blockchain community and create native blockchain companies or domicile blockchain companies in France. Germany is a little different. It has a very strong ecosystem. And I wonder how much of that strength in the ecosystem is down to some of the very forward-looking financial, in particular taxation aspects that Germany has brought out in relation to crypto assets. But then if we look at some of the smaller nation states who were, as the prior presenter indicated, some of the early movers, the Maltas, the Estonias, the Liechtenstein, the Gibraltar, they took an early advantage. And I know because I was on one of those shuttle flights that seemed to be arriving every hour into Malta when Malta was becoming the blockchain island. Those early mover advantages, again, were largely based around the ability to be flexible and move quickly. And also, if you don't mind me saying, Joshua, some pretty attractive financial or potential financial mechanisms for those founders, mostly from a taxation perspective. So when I look at the ecosystems for me, as a very small angel investor, I'm always looking for size because that creates an opportunity to secure talent and to attract talent, which is necessary for all blockchain companies. I'm looking for access to finance. Is there sufficient finance to create runway so that a very good project doesn't just fail simply because it's run out of cash? And then I'm looking for legal certainty. And right now, as I look to Europe, with the different ecosystems around Europe, I see anything but legal certainty. And with many of the early stage companies I talk to, the question I often get asked, as I've spent so much time in this building, so much time in Parliament, so much time with the great colleagues at INATBA who are doing fantastic work in terms of advocacy around these policies, I get asked, where should we base ourselves in Europe? And I'm very, very sad to say that the only answer I can give them right now is it's case by case. It depends on what your business is doing and who has, which member state has a favorable environment for how your business is going to be classified today. In 24 months, it will all change once MiCA gets enforced. So I'm sorry, I went off on a rather long British accented monologue. I can do it in French if you will, just to prove that I merit my place at the table here. But I guess my parting comment, just to close those opening thoughts, is that I would be looking for greater speed from Europe, greater speed of execution. There's a huge amount of thought. There's a good amount of learning that's taken place. I think some of the policymakers have some good education. Others, sadly, are still reading the headlines. But what's missing is pace of execution, and a willingness to embrace innovation, and frankly, money. No startup can survive without money.
Thank you, Mark. Last semester, one of my students, he was working on a project, and part of the project was to do some qualitative research on asset tokenization. Most of the people he approached, they thought that he was some sort of a fraudster. So how would you evaluate public awareness and adoption of blockchain and cryptocurrencies in general in Europe? And what do you think would be the best ways to follow to dispel this sort of negative feelings with the public of the public around blockchain and cryptocurrencies as such? Thank you. And this is a general question for all, if whoever would like to answer it.
Yeah, so I think there's a lot of negative perception still around the blockchain crypto space. I think one big problem is people out there do not know the difference between crypto and blockchain. So we need to start with the basics, differentiate between the technology and one financial application of the technology. Like Mark said, a lot of policymakers are just looking at headlines and making decisions based upon headlines. So do we need to put in place some sort of educational program, even for, yes, our policymakers to understand this technology in better depth before certain decisions are being made? So I think that is a major concern, especially when you see the headlines and you see people repeating the same probably misconceptions about the technology, that all this technology is bad for the environment, that we are killing the world because of blockchain. Now, there is some truth to the argument that certain blockchain implementations might consume a lot of energy. However, we should not just be replicating this argument without having a sound argument-based evidence on this topic, an evidence-based debate. I mean, especially when it comes to the environment issue, what is the utility that this technology brings versus the consumption? What is the utility that other technologies bring versus their consumption? So that is the argument we need to have. Now, that's just the environment, right? And then we start talking about corruption, or rather fraud and crime. Yeah, but there's fraud and crime in every industry. So I think we really need to get away from the headlines and really put all of these arguments into perspective of the wider context.
Thank you, Joshua.
May I jump in and add a few thoughts?
Of course, yes, please.
Thank you. So the challenge of education, and I do think it's a challenge for the industry, is particularly acute for the blockchain or the crypto industry, in my opinion, because it's heavily fragmented. It hasn't had a long period of time like the car industry or the tobacco industry, for example, to formulate advocacy efforts, to build relationships, to understand how government works. I mean, we're still talking about unspent transactions. We're still talking about lines of code. These are young organizations who are only just trying to upskill themselves and understand how to interface with regulators, with governments, and to be able to put forward their case. I think the industry is slowly coming together around certain points of aggregation to help share some of that learning, to help translate how the industry thinks and talks into terms that regulators can understand. And then importantly, also in reverse, to take some of those 200, 250 page documents that come out in very deep legal text and translate those into terms that the industry can understand, so that the industry has a chance to digest it and give its opinion back. That's a long process. I see some faces in the audience, in particular Simon over there, who is doing great work with his group, as Inatborough are doing, in helping to create a platform to foster that public-private engagement. But a lot more needs to be done. I note that in the US, the Blockchain Association in the US has been spending huge amounts of money and resources on creating interface with the US, the mechanics of government, to some degree of success. And to that end, I would add into my warning to us here in Europe that not only is China outpacing us, but there is a risk that the US is going to wake up and start outpacing us too. And then we could end up as an academic exercise whereby we've created these wonderful pieces of regulation in MiCA, and I think the majority of it is very good as a framework, transfer of funds regulation, and all of the other regulation and legislation that sits alongside it, just as blueprints, so that other geographies can take what is great out of it, accelerate quickly, and really execute with capital. So I do think education plays a part. And if we were 5 years in the future, and I was looking at utopia, I come from a telecommunications background, and I built my first company around conference calls, where we literally had operators pushing jacks into these huge units to connect lines with headphones on and saying to people, hold on a second, I'm going to put you in the room, you're okay to talk now. And we had to explain how it all worked. Now here we are, we jump into a Zoom call, nobody needs to tell us that we're using TCP/IP or what the compression algorithm is for audio or video, or whether your data connection is secure or not. You just use it. That would be my vision of utopia in the future for our industry, that the applications that are serving up identity solutions, that are serving up the ability to send remittances for low fees to those individuals who don't have bank accounts, they're just happening. And we're not having to talk about the bits and bytes. We're not having to talk about the classifications of a money token. Is an NFT in scope, out scope? Just what the hell is a DAO? And frankly speaking, as we're at it, what is Web3? I don't think any of that is helpful at the moment. So getting to a point where there is sound education, it is critically necessary for Europe.
Thank you, Mark. Anybody would like to add anything else? Nana, please.
Yeah, I completely agree with what Mark said, and but what I think is that we tried everything. I'm sorry, I forgot to mention Inatborough before. It was also one important milestone, the initiative of setting up the international organization like Inatborough, and it was really well governed by Mark and became very visible. What I think is that apart from education, apart from willingness of industry to embrace innovation, we need to, for example, we need to explain what is the technology behind and to divide this from cryptocurrency. And maybe this would be the first step. The second step would be, I think that after 5 years now, we see that maybe, okay, education is important, but is long-term investment. What we need is a fast move into or fast dive into blockchain technology. And what I think is that if one of the industrial partners that is very strong, like ECB, pulls the train out, then we will be on the right way to implement the technology as such. So we need a strong industrial partner, or maybe more strong industrial partners to start to use the technology, to start to use the cases that we developed, and to start to implement this in reality. NFTs are very important because they show the utility of the technology, and maybe we can also, through the NFTs, through Web3, explain how it can be implemented. But in any case, we need some strong market players to start to use the technology. Otherwise, education will be too slow. Willingness to embrace innovation from the companies is coming up, but it's also very slow. We in Slovenia had, for example, first call for projects in 2018, saying that the companies need to develop blockchain projects, but it's also in the beginning. Now the second wave from Recovery and Resilience Fund, and it's again one of the technologies that can be used. So maybe to pull some initiatives that can be very strong on the European level, and then to address the people through that initiatives. Thank you.
Thank you, Nena. I do agree with you that we need to move fast into the technology, but at the same time, the required skills are needed, and those are acquired only through education.
Yes, I agree with this, but the longer time to come to the result, we are saying education is important. Yeah,
I think we're on the same wavelength. So we have already run out of time. So I'm not going to say we are running out of time. Just one sentence as a closing remark for everybody. Nena, since we are talking.
Yeah, I wish the further strengthening of the ecosystem, either through education. If we stopped with the education, then we can go on and enriching that education also with the use cases, the lessons learned, which we have now in that years from 2017. Also with integrating this into the business processes of the companies and increasing their willingness to embrace. I don't know if we are going to be successful within the policymakers. They will further read the headlines only, but we need to find somehow a way how to introduce that learning by doing, so that it can be the most successful way to building up a further ecosystem and to strengthen the ecosystem in Europe. Thank you.
Joshua?
Yep, so I think Europe has a chance to lead in this space. We may be already there, right? But we may lose it. And I think we really need to acknowledge that we may lose it. And in order to not lose it, we need to put the money there, we need to put the right policy in place, we need to be quick, we need education. Otherwise, we're just going to lose the sector as well.
Thank you, Joshua. Mark?
I would say three things. Finance, make a huge amount of finance available for the innovators very, very quickly. I would say focus on skills. There are some great pockets of engineering skills in Europe, but not enough. Some of the best engineers that I've come across are trying to act as CEOs, and many of them are female as well, which I find absolutely awesome, and they always get my money because they're a lot more diligent than the, frankly, fat, lazy males I come across. And education. Educate, educate, educate. Public-private engagement is absolutely critical with evidence-based approaches, not headlines, not rhetoric, focused on action.
You have my vote on the engineer females. Thank you all for participating in this very interesting panel discussion. As I said, we could be talking about this, for hours, but we have run out of time like 10 minutes ago. So I would like to thank you again for this, and as well as our audience and our organizers. Have a great conference. Thank you. Bye all.
Bye.
speaker is Ms. Maya Madrid from the European Commission.
So, hello. Good afternoon, everybody. I hope you can hear me well. I'm not sure if the presentation is already there. Okay, perfect. So let's start. First, please allow me to present myself. I am Maya Madrid. I am policy officer in the Government and Trust Unit in DG Connect in the European Commission. You may know that my unit is the one that, working in all related to the eIDAS regulation, the first version of the eIDAS, if we can call it that way, and now also dealing with the revision and linked to that revision, the new proposal. I'm going to try to explain you what has happened during the last year since the proposal was adopted and where are we now. So can we move to the next slide, please? Thank you. So first of all, let me refresh a bit the background. So you may know that the regulation that deals with electronic identification, authentication, and trust service is the eIDAS regulation. That is the regulation that entered in force on September 2014. So this regulation relates in two basic pillars. One is the electronic identification, and the other one is the trust service part. And in the end, this regulation seeks to enhance trust in the electronic transactions in the internal market by providing a common foundation to secure electronic interaction between citizens. So in October 2020, the European Council concluded that the current system is no longer fit for purpose, and called for the development of an EU-wide framework for secure public electronic identification that include interoperable digital signatures and that provides people with control over their online identity data. So after this call from the Council, the 3rd of June, Commission adopted a proposal for amending the eIDAS regulation. And together with the proposal, it was established a framework for the European digital identity. And this European digital identity needs to be universally usable as a way to identify users, universally available to any citizen and resident in the EU, and also that protects personal data, giving also full control to users that can choose which aspects of their identity data and certificates they can share with third parties. Can we move to the next slide, please? Okay, so then there are three main pillars on this of this European digital identity. First thing is that it strengthens the national eIDAS system under the eIDAS regulation. This is done by improving the effectiveness and efficiency of mutual recognition of national eID schemes. This is something that wasn't really working perfectly in what we have now in eIDAS. So even through optional certification and the notification, that is the process where trust is built between member states, the improvement of this process will strengthen the national eID systems. Second, it opens also the private sector as a provider of identity link services. This second pillar means that private providers can offer digital identity link services by providing qualified or not attestation of attributes to the wallet. But they will, of course, need to follow rules for these qualified trust service providers that are anchored in national eIDs, as well as they are doing now for what they are doing on qualified trust service providers. The third one is that, and I think that it is, let's say, the central pillar, is that it provides a user-controlled digital identity in the form of a wallet. So this wallet will be an application on a mobile or a smartphone that will allow to store and use identity data and attributes and credentials. And this application or wallet needs to be based on common standards and will be, of course, under the sole control of the user. So maybe we can go also to the next slide. Next slide, please. Thank you. So now, what is precisely what this personal wallet will offer to users? First of all, and I have already mentioned a bit, is the user control. So what does it mean that user controls, that the wallet is under control of the user? In fact, is that the user will be able to manage their personal data through the wallet. So citizens will be able to request attributes and to obtain them, also to store, to select and combine, and also to decide to the relying party they will be sharing these attributes, to be able, of course, to authenticate and to use online public and public services. Together with the authentication part, it will also allow users to sign by means of qualified electronic signatures. Of course, it's a component of the wallet that no tracking of data, which are not necessary for the provision of wallet services, will be done in the system. It also gives the possibility to link identity to attributes and credentials. So it's a bit important to understand here that identity data and credentials are separate concepts to the wallet. So even if there are separate concepts to the wallet will allow to link that person identification data that we are calling PID, and they could be linked to attestations like driving license or prescriptions or diplomas. So where or how can the citizens use their wallet? So the goal is that citizens can use the wallets for authentication, for electronic signature, but also to use it in a potential range of other public or private sectors use cases. Sorry, from opening a bank account, or to fill tax returns, or proving your age. Let's move to the next slide, please. So let me explain a bit now what has been our journey, what has happened, and where we are now. So at the same time, the revised regulation was proposed in June last year. The Commission adopted a recommendation calling on member states to work together to develop a common toolbox to support the implementation of the digital identity framework. It's important to know that this is a calling on member states, so member states are driving the work on the toolbox, but it's of course done in coordination with the Commission. So this toolbox needs to include a technical architectural reference framework, a set of common standards and technical specification, and a common guidelines and best practices. So this toolbox, or let's say the outcomes of the toolbox, needs to serve as a reference also for implementing acts that needs to be further proposed in the context of the European Digital Identity Framework Regulation once adopted by the legislator. I mean, I only took a bit of explanation in case you don't know exactly how the legislative process works. After the regulation is adopted, the implementing acts will define more precisely how to implement the regulation itself. So the toolbox outcomes will serve to define these implementing acts as soon as possible after the adoption. So the toolbox should be finalized and published by Commission by October. And in parallel, the legislative process is running within the Parliament and the Council. So the Commission now is working with member states and the private sector first on the technical aspects on the European digital identity and the development of the architectural reference framework, but also we are in the middle of the negotiations with the Parliament and the Council. So can we move to the next slide? Thank you. Let me also explain a bit more or what we are doing in the toolbox process to be able to understand better how we are, let's say, not implementing, but developing what is the system itself. So as I said before, member states are working, member states are the ones working towards the development of the toolbox with the support of the Commission, and where relevant, other public and private sector parties are also invited to join to these developments. And what is the specific objective of the toolbox, as I explained before, is to identify common standards and specifications. And these standards and specification will draft the architectural reference framework. And it's very important because this architectural reference framework is the basis of two important parts of the developments of the European Identity Work Framework. The first part is the reference implementation of the wallet, because the same way the Commission put at the service of member states reference implementations of the eIDAS node when the first eIDAS regulation was adopted, the same way Commission is going to put at member states' disposal a reference implementation of the wallet that they could also offer to their citizens if they will. And the second important development is that this architectural reference framework that comes from the toolbox will inform the large-scale pilots. So large-scale pilots are meant to test also the wallet in the context of practical use cases, and these large-scale pilots needs to rely on the architectural reference framework for their implementation. And I will talk about more about the large-scale pilots later. Just thank you. So this is a scheme of the toolbox organization. You can see that there's, I mean, in the middle of this slide, we have 4 core working groups. That is the ones that are working in the, let's say, main functionalities of the system. It's maybe too specific, but what I would like to show you here, and you need to keep in mind, is that there are 4 working groups, but there are also other groups that are working in specific use cases that are more oriented to the business needs of the different sectors, and that will define functionalities that need to be implemented to the wallet to be able to be used by that specific sector. Because sometimes we have legal constraints or prerequisites or uncertain technologies that the groups that are developing the core functionalities needs to take into account. Again, it's very important to mention that it's the member states process, and it's coordinated by the European Commission, and that member states will decide how the system will finally look like and the definition of the common standards. You see also here in the right part of the slide how these outputs will fill the wallet reference implementation and the large-scale pilots. So let's move to the next slide again. Thank you. So talking a bit on the procurement, on what is the reference implementation. So procurement is a process, in fact, that has the goal of building that wallet reference implementation. And that reference implementation should be able to support member states and also other stakeholders in developing, implementing and scaling up the European Digital Identity Framework. But also this wallet reference implementation will serve as a basis to enable piloting. So the procurement is not linked only to the toolbox, but also to the large-scale pilot. You see that here we have like 3 main components on what is the development, what is the toolbox process that also interrelates with the reference implementation, but it's also linked to the large-scale pilot. So it's a quite, let's say, complicated process. So the tender was launching in June, back in June, now in July, so in June, and we wish to have from September a product based on the architectural reference framework, but the minimal viable product for Q4 of this year. But there will be also subsequent releases with extended functionalities, mainly from the feedback that we have from the pilots. And our wish is to have a reference wallet implementation tested, certified, and ready for deployment in the first quarter of 2024. And just the last slide on large-scale pilots that I have mentioned before. So to test the wallet in the context of practical use cases, there is a grant for member states to be able to apply and to build these large-scale pilots. We expect to have these large-scale pilots on the use cases that has been studied and followed by member states in the context of the toolbox. These ones are mobile driving licenses, prescriptions, digital payments, and exchange of university diplomas. But this is not that the call is not constrained only to this one. So if there are other use cases presented, there will also be considered, of course. And the large-scale pilots needs to contribute to the finalizing the concept of the wallet in different national contexts. In the end, these large-scale pilots aim to test what has been done, the work in the toolbox process, and to see if how this can be implemented. It's also good to mention that even though pilots are for testing, we will require that they are able to go to production soon. So we are looking for projects that are mature enough to be ready and used by citizens as soon as possible. And just, I think this is my presentation. I have a last slide only with background documents. So in case you're interested in looking at some of these, but anyway, you can contact us for any other information that we used to have. So thank you.
Thank you so much, Maya Madrid, for presenting this and for also joining us later on the panel. This is really great input for this conversation today. Thank you.
Yep.
Hi, everybody. Kai, do you maybe want to introduce yourself when you start your presentation?
Yeah, thank you very much. I just had to quickly change my slide decks. And yeah, we are here today from INATBA, and we're happy to be hosted by the European Blockchain Observatory and Forum under the umbrella of this event today, and also for the European Commission to host us in their building, and also for their continued support in the last years. This is really a great collaboration that we're having, and I'm really glad to represent the Identity Working Group here today, together with my colleagues from other working groups of INATBA. And what I quickly want to go into before we move into the panel part of discussion is to introduce to you on a high level what the policy position of INATBA is on this particular file that we've just heard about. So what I'm trying to do is really going into a bit of detail on what we think is very well done and very well, so to say, proposed in the current proposal from the European Commission, but also there's been first committee reports on this. There has been a lot of work happening. The proposal is actually dating back to June last year. So we had 12 months of work going into that already, and significant amounts of advocacy work as well from INATBA. And all of that has informed our policy position further on. And I just want to share that with you before we go into the actual panel. So kind of to summarize a bit what we've heard before from an INATBA perspective, we think that the European Digital Identity Wallet is one of the biggest innovations that comes with this new proposal. So the idea that instead of having your different national ID systems, which might be card-based, might be smartphone-enabled, might be even some username, password plus token system, so there's a huge variety. All of those systems are supposed to move into one coherent user interface that is living on mobile devices primarily. Could also be living in a cloud environment, but predominantly will be accessible from mobile devices via a wallet application. And that alone is a significant change in terms of how we will think about digital identity in the future, and how in the European market, in our perspective, users, citizens, and also businesses will think about the idea of digital identity, digital signatures, trust services, and all the associated everyday interactions they can have. Then what we really value in the proposal as it is the privacy first approach. So there's really already, to a large extent, many privacy considerations and many safeguards against misuse introduced into this proposal. So what we see also from stakeholders outside of INATBA is that there's a lot of positive feedback and a lot of really recognition for taking the steps to make this proposal a very privacy preserving and a very kind of data minimizing proposal when it comes to how we can handle trust services, how can we handle digital identities and the exchange of our most sensible data. So this already is a really good starting point, and I will go later into a few points where we think this could even be improved on further on in the process. There's also something very new in this, and it's the idea of qualified electronic attribute attestations, or also just simple attribute attestations. So there's two types depending on their level of security. And this is a completely new concept. It hasn't been in the 2014 eIDAS resolution. So maybe a quick note on this as well. There has been an eIDAS resolution back in 2014. It introduced the kind of harmonized trust services and harmonized digital identity for Europe. And this eIDAS 2.0, that's why we speak of 2.0, is basically, as we've just heard in the presentation before, an attempt to really bring this onto the next level, because the old version is no longer fit for purpose in the current days. And what this idea of electronic attribute attestations brings to the table is really the idea that you can bring all types of credentials into the European Digital Identity Wallet, and all types of trusted parties, all types of authentic sources, be it a university issuing a diploma, being it your employer issuing you an employee pass or an employee entrance card, and all of those kind of credentials and different types of tickets you might be using in your everyday life can theoretically, based on this proposal, be represented in the European Digital Identity Wallet. So you can really think about this as an Apple Wallet plus a lot more of functions, including the function of having government-supported identities in them, right? So this really is a very, very interesting proposal, and this concept adds to that. There's also, I think, an important inclusion, although it has indirectly been part of the conversation in the eIDAS 1, there has not really been uptake by the private sector in most member countries. And while there is a regulation for trust services in place, many member countries have not really engaged in that business so far, and there has not really been an effect of the size that could be achieved by today's standards, I would say. And the new proposal that we will talk about today really puts an effort on including private sector scenarios and private sector use cases. And this, in our perspective, is very important, because we cannot just think about a digital identity that only works for the public sector, only works for e-government. But in an ideal world, from our perspective at INATBA, the digital identity should be able to handle all of those different domains and allow you to address all of those different use cases from one specific place, and that would be the European Digital Identity Wallet, or at least this is the proposal. The next part, or the last part, I want to quickly kind of highlight in terms of key innovations that we think are there, is a point that really will, in our view, help a lot with the adoption of this technology and the adoption of this new ecosystem for digital identity and trust services, and particularly the European Digital Identity Wallet. So every European citizen will have access to such a wallet. That is really an important part, actually, I wanted to make here as well. And there still is the big question when you talk about digital identity. It's a chicken and egg question, as usual, right? So you have wallets on the one side, but you usually have an issue of getting services on the other side to actually be willing to accept them. So either you're coming from the service side and you want to innovate your service, you actually know what you want to get your users to do, you want to provide better access for your users, but it's sometimes hard to decide and to kind of know which identity technology they will use or which one is best adopted from your users. So you kind of err to the side of username, password, and they don't come with some other existing or pre-existing identity most of the times. And here this proposal is making a very, very important point that might help significantly with the adoption, and that is that large gatekeepers, and what is meant by this is large online platforms with a significant amount of users, will be required to have the option to log in or authenticate with the European Digital Identity Wallet actually as a requirement. So it's no longer that a large platform will only allow you to log in with their particular credentials or only will allow you to log in with Google or Facebook. But if this remains in the proposal, there will be a requirement to also accept the European Digital Identity Wallet for that process. And that will, in our view, be a great kind of driver in the market to actually make this solution an everyday piece of technology. Without trying to not take too much time and leaving us more time for the panel, I will really go very quickly through the points of our policy position. This is also worked out in a document that can be provided later on, also in personal dialogue with us, just really approach us for that. And there's kind of 7 key points where we think there's currently work needed, or there would be, from our side, interest in discussing this further with the different stakeholders of the process. The first one of them is to remove the requirement for a persistent unique identifier. This has been introduced in the proposal, and it is a point that is introduced for the sake of matching different data sets across member states to ensure that certain services or certain government services are not delivered twice, to kind of solve the double spending problem in kind of blockchain terms, if we want. In our view, and from the kind of expertise we gathered, there is other ways of achieving this goal, and we describe them, and we think that there's other ways that do create less of a privacy issue than a unique identifier actually introduces as a privacy issue, but we can go deeper into that potentially in the panel. There is a second point regarding safeguards. Right now, the proposal is very well developed in the area of issuing of verifiable or issuing of electronic attribute attestations or issuing of identity as such. There's also a lot of good work in regards of the PID part. Now going maybe a bit into too much detail, but regarding the attribute attestations, unfortunately right now there is not enough clarity about how there are safeguards put in place that ensure that there is no fraudulent requests for data, or that there is a way you can properly protect yourselves against some relying party or some accepting party actually asking you for more data than they're actually supposed to, or that they're actually entitled to. We're also making proposals of how to solve that. Then further on, there is a very interesting proposal which we think should be retained, and that is the proposal Article 6A1 to allow member states to not just have one wallet that they issue to their citizens, but actually to allow for multiple wallets and to allow for them to be issued by the private sector. In our view, that is very important in order to provide, on the one side, competition for the best solution, right? So there's very clear guidance, there's the toolbox, everybody has to implement the same thing under the hood. But in regards of meeting customer need and actually getting the best user experience delivered, we believe that competition will help a lot and actually provide better choice. Then there is another point regarding amending the Article 45F. This goes a bit into detail, but what this really is about, again, is the point of adoption. So when we want authentic sources, so for example, universities, employers, others, to issue these electronic attribute attestations, we have to ensure that this is very easy for them, especially if they are the authentic source, right? If they want to provide you with a university diploma, it should be easy for them to tell very clearly in the ecosystem of this eIDAS framework that they are a trustworthy university able to issue that particular type of diploma. Right now, in our perspective, this is a bit too rigid. It's a bit underdeveloped in order to kind of put, like right now, it puts very high demands to the authentic sources. And we think that there would be a good solution in providing different levels of kind of security that have to be met, different levels of assurance ultimately. So kind of meeting the level of assurance system that has already been introduced in the old eIDAS, and kind of trying to introduce that into the issuance process as well, just to have a larger adoption and to make sure different types of issuers or different types of authentic sources related to their risk profile meet a different set of requirements, which will result in different cost and thereby lead to a situation where they might opt for actually issuing rather than opting against it due to cost or effort or others. Trying to jump through this a bit, sorry. There is the next point that we think is highly important. It's already been introduced in the procurement process for the wallet, which we think is a great point. So it's the question of being able to back up and to have a general life cycle management for the wallet. So we all know that phones are being exchanged every 1.5 to 2 years. And if we have to change our European digital identity wallet from one phone to the other, ideally, this should be a very easy process, right? We don't want to go through a whole personalization process, getting our eID back, getting our mobile driving license back, and all of those kind of things into the wallet can be a very cumbersome process, can be potentially something that is keeping people away from utilizing a wallet. And in our view, this should be part of the actual policy text. So it shouldn't just be handled via, for example, the procurement text, or should not just be handled in the toolbox, but there should be very clear demand for what type of lifecycle management should be enabled and which kind of user stories ultimately should be possible. Because if that is not taken care of, there's a big chance, and that's one of the kind of technical details of backup, that the decision for a particular approach to building a wallet will completely cancel out several backup approaches. And that is a huge technical issue that has to be covered kind of right from the beginning, using the right user stories and referencing them accordingly. Then coming to our pre-last point, there is something obviously very important to INATBA, and that's the question how different blockchain environments, including public permissionless environments, can be regarded in relation to the eIDAS framework. What I have not mentioned before in the kind of innovations of the eIDAS is that actually decentralized trust services, and you can actually build them using DLT, are enabled under eIDAS 2 and are actually proposed as a means of providing trust services. So decentralized trust services are finally kind of becoming regulated, so to say, but there is a very clear distinction for them not being public permissionless. So we're speaking about the Ethereum network, the Bitcoin network, things like that. In our view, that is absolutely fine, because there is a clear kind of boundary that has to be drawn in order to make those trust services properly definable. But what we think is missing is a way to compare those two and to understand how they are in relation to another. And we think that there needs to be a delegated act that clarifies on this. And that's basically the proposal we're making here. And lastly, this is a kind of smaller point, but not less important. It's the question of making user authentication in proof of inheritance, or like making proof of inheritance based user authentication more clear. This is really a bit of a detail, but it's something that matters in the end, because when you do user authentication, there's different ways of achieving this, and there's different kind of international standards that can be taken reference of. And right now we see that this has to be developed a bit further in order to meet the kind of international standards for that in our view. And with that, I would actually take it to my last slide for this topic, and that's the European Identity Toolbox, or eIDAS Toolbox. So this is all referring to how is the European Digital Identity Wallet and its ecosystem being built. In the view of INATBA, the technology of self-sovereign identity, or the concept of verifiable credentials being issued to wallets and being presented from wallets, is a highly capable model. We already see in different proposals for the toolbox that this is already being discussed. We see the standards and the different specifications being actually debated right now by the expert group for this topic. And on our side, we just really want to, again, highlight the, in our view, fit of this technology and the need to discover this more, discuss it more, and really try to put those principles and ideally also those specifications and standards into practice when it comes to the toolbox. Thank you so much. Just a quick note on other work of the working group, which also relates to those topics. So for those interested in the audience in reading up on topics that we just covered here with the position paper, there is a large position paper that has been issued in the December or November of 2020. It's also been widely discussed beginning of last year, and still I think is very much an up-to-date introduction to the topic. We'll make the slides available afterwards, so you don't have to take screenshots of the domain here. But there is also a very recent blog post, and that is something I think could be of interest to many of you as well. There has been an introduction of a mobile driving license standard under ISO. And this standard is also, to a large extent, following concepts of self-sovereign identity, or of verified credentials, so to say. And we took the work of comparing those two approaches and actually making a comparison that helps us to understand where they potentially could really excel and where they potentially could complement each other. So if you want to read up on that one, please feel welcome.
Thank you, Kai. Hi to everybody in the room and online. My name is Christian Hauschild. I will be the moderator. I'm here on behalf of the EU Blockchain Observatory and Forum. We've already had the pleasure of hearing from Maya and from Kai, but maybe also to introduce our other panelists. We have Paula Udebert, who is here today speaking as the co-chair of an eIDAS privacy working group. And we have Daniel Bachenheimer, who is here speaking as the co-chair of an eIDAS identity working group. So thank you to all four of you for being here. I'm by no means an expert in this topic, so I won't be speaking a lot, but I have a number of questions for discussion, and I would maybe encourage everybody to just speak up when they have an opinion, but I'll start by pointing one towards you, Maya, if that's okay, which is whether we will see significant changes in the digital identity ecosystem for private sector use cases with the new eIDAS.
Of course, I mean, first thing to say is that the eIDAS, this version of the eIDAS, the 2.0 that we are calling it, I'm not sure if this is the correct, very correct term to say, but let's say the new proposal and what it aims, it's let's say to enhance what we have in the previous system. So you know that the eIDAS 1 was very limited in the way citizens could identify, and only by sharing attributes, but with no capacity of sharing credentials linked to their identity. Also, it was more oriented, or it has been more developed for public services, but not so much for private ones. And the fact is that one of the most important changes for the eIDAS in this version is that the private sector will play a key role in the implementation of the European Digital Identity Framework. So this includes equipment manufacturers, mobile network operators, eID and trust service providers, but also key industrial sectors that could rely on the wallet, such as finance. So not only the new ecosystem, we expect that citizens can authenticate to private relaying parties, but we expect to have a well-developed trust service market that is also able to offer citizens a variety of electronic attestation of attributes that are qualified or not. Guy has mentioned before the fact of the requirements for the issuers of electronic attestation. Maybe we can also review this a bit later. But what needs to be understood here is that in the end we are building a system that not only relies on identity information coming from public entities, but needs to be fed by other type of information that comes from the private sector. And the private sector is a key enabler for the new proposal, in fact.
Thank you, Maya, and I'll avoid referring to it as the new eIDAS, but rather as the new proposal. I don't know if anybody from the panel wants to add to this, or maybe mention what they see as the highlights in the new proposal.
Hi, everyone. And thanks, Maya and Kai, for the great presentation before. I think the highlight of the new proposal, speaking from eIDAS perspective, will be as well the creation of novel trust services, including the trust services of electronic ledger, that could be applied, like Kai say, to DLT, decentralized ledger. So this is a big step for the industry, even if for public permissionless decentralized ledger, we still have questions, but this is a big step. And the creation as well of the trust services of electronic attestation of attributes, which is very novel, which is a big step compared to eIDAS 1, is a great news for the SSI industry, self-sovereign industry. So I guess that's a real opportunity for the private sector to actually thrive on these new services and to develop novel use case based on that.
Yes, thank you for the opportunity. I'd just like to add, and Maya made some of the key points and how this digital identity is novel and can be used. Well, first of all, online identity authentication. Well, how do we do that today? So Estonia considered one of the leaders of digital identity, and I'm an Estonian e-resident. I have my card, and I could access, what is it, 5,000 or 6,000 services with that card, but I need a reader, right? So, and it's right now, it's limited to something I have, the card, and something I know, my PIN number. Here, the eIDAS legislation is talking about adding that the biometric one that Kai ended up on, and that, so how can I now, using my European digital identity, access online services? Now I could, because it's assurance level high, I'm going to get access to even higher assurance level services. Some other key things that Maya talked about is now I could select the data elements that I want and combine them. If we look at what's the most common digital identity construct that's used for cross-border in the world today, right? An ICAO e-passport, right? Well, that has one issuer, and I cannot selectively disclose information from it. I can't do what Maya talked about, select and combine identity attributes, because I can't combine anything because it's from one issuer, and I can't selectively disclose it. I have to give, it's all or nothing with the e-passport. I think those are some of the key things that come out of this legislation.
Yeah, I'll keep it short because I had quite a bit of speaking time already, but I think what this kind of really can be illustrated with is that use cases such as applying to university, presenting a diploma from your school, a kind of first note about your ability to pay the semester costs, then the kind of new address credential that you might have already received from your landlord that allows you to register in the city and also tell the university that you're already registered in the city. All of those kind of things can be entered into a form, entered into a digital process in the same moment without having to move through different applications, without having to go to some folder on your computer, trying to find this digital certificate, or usually today PDF scan. And all of this can finally be digitized and actually be processed in an automated fashion with full trust. And I think that's the interesting part, right? Automating a PDF-based process and kind of doing this with reading technology and stuff kind of works as well today, right? It's not ideal, but there can be processes like this. But like, there's no trust in them, right? There's no possibility to really know, has this PDF really been issued by the entity that claims to issue it? Is there a full audit trail behind the exchange where I provide this document, where I provide this credential, and the actual entity that issued it? Is there cryptographic proof for that? And this, in my view, is really the biggest potential for a whole market to be established. We've already seen the kind of very good initial results from the first eIDAS resolution, and we think that the proposal as it stands today really offers an incredible opportunity for a trust market to evolve in Europe.
Thank you. You mentioned something interesting about crypto, and I think we should come back to that. But you also mentioned the market, and how do you believe the market will change, both in the EU and globally, for that matter, the identity market essentially, because of this new proposal? Should it be in its current form?
Yes, if I may.
Yeah, sorry, go ahead, Maya.
Yeah, I wanted to react to Kai's intervention because I think that the key point here is the trust and the building trust in the system. Because I mean, we can have a very good technical system in place. We will make a choice on technology standards, protocols to be used. But the fact is that in the end, what we need is to build an ecosystem where relying parties can trust that what they receive is in fact something that is reliable. So and also cross-border, because I mean, maybe this is something that it's easier to be done in the context of one member state, but we need to build trust for the whole European Union. So that was my point. Sorry for interrupt you in your first question.
Yeah, I think it's great that you actually interrupted. It's just always tricky to handle this with online and offline participation on the same panel. So really good that you just jumped in. I think you should continue with that. But yeah, just kind of to make a bit of a point of what lies in that current kind of change is, in my view, already visible to some extent today. So what we see is that many actors in the digital identity market are looking a lot at the process. There's a lot of interest. There's obviously also groups applying for support to the large-scale pilots. There's different consortia building to build the wallet. And while, yes, it's a very well-funded project, the procurement for the wallet, it's also obviously a question of positioning yourself in that market, right? And we see that many large vendors and consortia are kind of setting themselves up to do so. And what we see even more so is that in standardization groups around the globe, so not just European standardization institutions, but actually really on a global basis, this topic of eIDAS is a huge topic right now. And there's a huge interest in understanding whether this idea of building a common toolbox and really setting a European-wide standard kind of for how digital identity wallets have to be built, what the specifications for them are, how exactly a qualified attribute attestation has to be issued. And all of those things will, in my perspective and in the perspective of our group, and we've been discussing this so far, have significant effects on how the rest of the world will think about their digital identity systems. And potentially there will be quite a bit of cascading effects towards other markets outside of the European Union that will benefit and make use of those new decisions being made on the basis of the European digital market.
Yeah, I would like to react on that from a privacy perspective as well, because that's true that eIDAS 2 proposal, if adopted and well adopted, let's be optimistic, will have an impact on the world and on how other countries will actually regulate digital identity. And the very good news is that from a privacy law perspective, this proposal is actually really safeguarding, really preserving. We have safeguards, making sure that issuer of the wallets cannot actually track data from the wallet use. We have also safeguard ensuring that electronic attestation of attribute issuer cannot actually track the use of this attestation. So I think the proposal was very well drafted, and like the GDPR was a precedent for privacy regulation worldwide, that this proposal will be a precedent for identity preserving privacy solution in the world.
Yes, I'll follow up with an example. I like examples and lessons learned from the COVID credential era. And we're with this model in place, we would not have globally floundered trying to come up with a privacy-preserving COVID credential. What was the most prevalent type of COVID credential out there? A barcode that had private health information and personally identifiable information on it in the clear. A lot of people were confused. Well, it's encrypted. No, it was never encrypted. It was digitally signed. So you had that plus, much better than my US CDC card, which has nothing digital whatsoever on it. But this is what we learned. We have this COVID credential. It has all your health, information, your personally identifiable information, and you're supposed to link it with a photo ID, because it typically had your first name, last name, date of birth in it, along with your health status. If we had this ecosystem in place, we could have used privacy preserving. Were you vaccinated, and use a zero knowledge proof as Kai laid out as an SSI construct, a zero knowledge proof. Yes, I've been inoculated, and yes, it's within whatever the acceptable period is. I don't have to provide all my health information, and it can be associated with me because I'm in possession of my wallet. You could do a biometric binding to it. But had we had this ecosystem in place, back to your question of how do we see it affecting the world, it would have easily solved the COVID credential problem.
Let me come also a bit here and react to this question, because what I can say from the Commission is that we already see that third party that does not relate to the European Union. I mean, this project has created a lot of interest within the European Union, but a lot of interest outside our borders. So, for example, US is interested in what we are doing, and we have been approached by them. Japan is also interested, and so we have many many third parties that are and countries that are interested in what we are doing. Still, of course, we need to explain what we are in the process. We don't have still the system in place. The regulation is yet to be adopted. We only adopted the proposal, but not the regulation. So there are still things that need to be redefined. But still, there's interest from let's say the whole world to see what we are doing.
Thank you. Interesting to see the talk about the potential of the new proposal and the ecosystem that it would lead to. I like the panel's opinions and views on whether this new proposal and the new ecosystem could be used by crypto or digital currency and blockchain in general, and in what way. Daniel?
Sure, I could start off. I mean, this is, as co-chair with Kai of the Identity Working Group, you know, we know that financial transactions have an identity component to it, but just I'll stick on one aspect. You know, the know your customer, know your client. You know, that KYC aspect. One of the things that, you know, because we have these cryptographically verifiable attributes, if I have to prove my employment history or prove my residency or any of these other type of attributes that I could have in my wallet, cryptographically signed by various entities, when I go to open up a bank account or do a financial, you know, conduct a financial transaction, the fact that I have these cryptographically verifiable attributes is going to make that process a lot easier and a lot more secure. I'll just leave it at that.
Yeah, I don't have a lot to add on that, but when you read eIDAS 2, you can see that this use case is already kind of planned, because in every instance where strong user authentication is needed, and this is the case of financial services, the eID wallet will have to be used. So we can think of a world where some crypto platform actually require to use the EU digital identity wallet. That's all I had to add.
Thank you, Paula. I don't know if Kai or Maya want to add something to this.
Yes, I may. Kai, if I may. Yeah, only to say that of course the financial sector is very, very important to what we have, and Paula has mentioned it. It will be required for strong user authentication. That it will be required to use the wallet. So the fact is, this is also linked to what is remote onboarding, and this is something that it's yet to be discussed among member states. So if what we think is that with the digital identity wallet, it will be much easier to fulfill the know your customers and customer due diligence requirements for the anti-money laundering. But however, the European standards for this, what I talked about before, the remote onboarding, are not yet fully harmonized. I mean, we have member states that have many different opinions on how this can be taken as level of assurance high or not, or how this needs to be, let's say, considered. But the European Banking Authority is now working on guidelines on how this remote onboarding. And in addition, we have the legislative proposal by the Commission that is under negotiation by the European Parliament and the Council. And once they had agreed to a final text, we will have a new European anti-money laundering authority that shall be established. And this new authority will provide harmonized standards, not only for remote onboarding, but also for the use of the European digital identity wallet in the process. So in the end, this proposal, our proposal, is very, very linked to what is the financial sector and how they could handle the identification with the European wallet.
Thank you, Maya. You mentioned something interesting, which is the alignment, and obviously every time there's a new piece of legislation or a new policy in place, there is a lot of alignment to be done between member states and even with the private sector as well. What is your expectation for the regulatory process? How do we get from where we are today to where we want to be? Maya?
So, of course, our expectations is that we can now, let's say, convince that all member states that the proposal is the best proposal. We are now as I explained before, we are now in the middle of the negotiations on the council and in the parliament, and there are some, let's say, more controversial topics that still are under discussion, like the unique identification, the fact that we require levels of assurance high, and ones that are really crucial to the proposal that are still under negotiation. So what we will hope is that, and I'm sure that we will find an agreement for this, but still what I can say is that that the negotiations are ongoing, and we hope that with the new presidency of the Czech Republic, we can have a text that it's more or less agreed by all member states participating.
Excellent, thank you for that. Any thoughts from our panel members on this?
Sure. I'd like to invoke another example based on what Maya was talking about, this remote onboarding, and it relates to the seventh, this inherence position that we were talking about. Well, what could be the controversy or the problem with remote onboarding, right? We see it all the time now. A lot of banks, especially, say, "Oh, well, you could use your smartphone and scan your passport because now we could RF read that and you could take a selfie and match it against that passport because, well, after all, it's a passport." And now I could do this remote onboarding, right? Well, not so fast. I'll give you another EU example. In the entry-exit system legislation that became law last year and that the EU is building out now, that law said you must take the photo live in front of an official to register this visitor. When this goes in place, that will be me. So I have to register live in person. Why? Because the photo in that e-passport has kind of three suspect things. It could be old, typically up to 10 years old. In the case of US, UK, many countries, it could be morphed, and it's been proven that it's morphed because what are we told by the US Passport Authority, right? Take a photo of yourself, print it out, mail it, and then we'll scan it and redigitize it. Well, in that process, there's been shown to be morphs in that, where it could be me and my face and Kai's face can be combined into that DG2 photo, and either one of us could use an e-gate, for example. How secure is that? That's why the EES legislation says that the file photo in EES that must be used to compare for every other border crossing has to be taken live. And so this is part of the controversy, perhaps, that Maya was talking about with remote onboarding. What is good enough? Can we use a passport photo? Or what we're seeing in the US too is people scanning we call it surface personalized photo, the photo on a driver's license, because there is no digital photo in a driver's license in the US. It's just what's printed on it. So then they're saying, we'll take a picture of a picture and we'll use that because it's a state driver's license. Of course, it's not been manipulated. So that's some of the things that certainly I see about remote onboarding problems.
Yeah, I think this is kind of very much relating to the question of where do we have to have coordination and where do we actually have to come to an agreement, or actually not us because we're NATBA, but the involved stakeholders that have a decision in that. And what I would like to highlight here, or maybe kind of switch focus a bit from the actual policy process more to the toolbox process and to what we want to see or will see as a kind of unified ecosystem built on common specifications and shared specifications. This looks to be the most ambitious project, at least I could imagine, because we try to maintain all of the existing member state eID systems. And yes, not every member state has one, but almost every member state has one, and they are incredibly heterogeneous. So they're all supposed to find their way into the wallet. Each national wallet should represent the national eID scheme plus the additional features of the EU identity wallet, but it means that there has to be a very clear kind of vision for how that can be achieved, right? All of those different national eID schemes, which have different user experiences, are relying on different kind of potentially hardware tokens that have to be held to the phone, things like that. So really, really interesting as a starting point. And then we are coming to a situation right now where we are having the eIDAS expert group, which is the official kind of group that is supposed to deliberate in those different groups that Maya presented on her slide, working group 1 to 4, how exactly the toolbox should be specified. This process currently, from my perspective, seems to be a bit slower than expected. So I personally would not expect that to happen in October, but I'm still hoping a lot for that to happen. And all of the procurement processes, which we have heard about, right? The large-scale pilots, which are kind of procured until end of August, and the wallet procurement, which we also heard about, they're all happening in parallel, right? And all of them ideally should be informed by a very clear policy, which is in place, right? And then for me, there's multiple lines currently set up to start running in parallel, some of them setting up on the same kind of starting date, so to say. And we really, I think, as stakeholders to this process, have to keep in mind that it will be incredibly hard to keep those lines parallel and at some point let them converge. So I'm really interested maybe to you, Maya, if you want to react to that again. Like, is there any concept for how to align those? Is there any concept out there? Because I'm just baffled by it.
Yeah, I mean, it's not an easy process. Let's put that from the very beginning. We set a really ambitious timeline, and it's not easy to achieve. And member states, of course, are working hard towards the finalization of the architectural reference framework. I would think that even we are going to have an agreement of the architectural reference framework by October. This most probably will not be the final one. But the fact is that we need to run in parallel all these processes, because otherwise the timeline will be extended by years. So it's true, we need to have our architectural reference outlined for the large-scale pilots, because the large-scale pilots need to be based on that. We need to have also this architectural reference framework for the procurement, because the wallet needs to be based on the specifications that are agreed among member states. And let's say the process now run in parallel, but there are points where they need to converge. So when we have the first reference implementation, this first reference implementation will be based on what is out from the architectural reference framework. And the large-scale pilots will be using that wallet reference implementation. So it's kind of a cascade of events that needs to happen. We are trying, of course, to let's say, to streamline the process to be able to, for this to happen. It's not easy. And it's also not easy because from the very beginning, this, as I said before, this has been a very challenging timeline that we have in front of us. But of course, we are doing our best to be able to keep that. But if we don't do it like this, if we wait to have the toolbox, and then when we have the architectural reference framework, we start to think about large-scale pilots. So that will take at least another year to be prepared. I mean, now we are not, you need to think that the large-scale pilots, the call is open. It will be closed by mid-August, but then we need to have the evaluation, and then you need to sign, right? So there's a process where this let's say, this particular part is a bit delayed, so we can still work on what is the toolbox to be able to be ready for when the large-scale pilots or the wallet reference implementation needs to have it. So yes, it's very complicated. It's challenging, but still we are trying to have everything in place, because the goal is to have the wallet for the citizens as soon as possible.
Yeah, thank you so much for reacting to that. I think it's really incredibly interesting to see how that unfolds. And I'm personally glad to be a stakeholder to that process and just have a chance of following up with that. And when you said earlier that stakeholders from third countries and outside of Europe are looking at what we're doing here right now or what is being done, I think that is a particular part of it, right? Like, is it possible to, I mean, everybody who's working in standards knows how hard it can be to even align on a detail. And here we try to really bring a big picture into the world in very short time frames. So really excited about this, actually.
Thank you. There are a number of challenges. Another challenge that's been highlighted is how we create an issuer ecosystem for the private sector. And I think that's worth considering as well, because one thing is obviously the public sector, but the private sector involvement for this to be taken up and used widely is a must. So I don't know if you have any views you want to share on this. What are the requirements?
I mean, that's kind of the million-dollar question, I guess. I mean, it all comes to incentivization to join this system, which is new. And that's a complicated one. Many working groups, including eIDAS, are working on business model of SSI and of this proposal. The impact research that the proposal has also reflects on this question. And I'm sure Maya can touch on that after. But I guess the very good news is that electronic attestation of attributes will have the same legal effects as regular attestation on paper form. So meaning that you will have a regulatory obligation kind of to produce these new standards, to join the ecosystem. So this is a mechanism of incentivizing people to join, issuer to join the ecosystem. And at the end of the day, the wallet should be free for a natural person like you and me. But it doesn't mean that you cannot monetize service on top of the wallet. So of course you will have monetary incentivization, I guess. But I'll let you guys jump on that.
Yeah, I think that the issuer ecosystem will go, private sector issuer ecosystem will go hand in hand with the verifier ecosystem. So yes, it's great that that you could issue cryptographically verifiable credentials in this case, but unless you have consumers of that, it's going to go hand in hand, and that's going to once we establish that trusted ecosystem, that trust ecosystem, and the corresponding governance model, yeah, that's what's going to get adoption. So it's both in the private sector, both on the issuer side and on the verifier side.
Yeah, there's one point I would like to add here, and that is very likely the kind of schematic standardization of certain electronic attribute attestations or qualified electronic attribute attestations. So there is a huge need for certain types of attribute attestations to be clearly specified and clearly kind of also in terms of their schematic representation specified, in order to allow for multiple different issuers to select or to decide to issue them or to be able to offer them on the market, right? So there should not be a situation emerging where different issuers of diploma credentials issue very different types of diploma credentials, right? Ideally, they should be looking the same. And they should at least be structured according to the same logic so they can be understood by the relying party or receiving entity very easily. And those factors are not directly in the regulation proposal that we're looking on right now, but for the market of electronic attribute attestations to really emerge and to have potential, we need to think about these topics as well. There needs to be a set of use cases and associated credentials that are being proposed, that are being advertised, that are being pushed into the market by actors trying to make comparable products available on the market. Usually a market works very well when you have different products that try to solve the same thing. You can compare them against each other, and then you can compare them based on price. As soon as the receiving party has a hard time understanding what they're getting, even though they're asking for the same thing, but it looks 4 different ways from 4 different providers, this will be a huge hampering part or a hampering kind of factor for the market. So this definitely is a key point. And what we've mentioned earlier, kind of coming back to our policy position and number 5, is that we really should think about the different types of attribute attestation issuers to go through different levels of effort in order to be able to issue, right? So potentially differentiating for qualified attribute attestations and regular attribute attestations, but potentially even introducing a few more levels that allow a very cost-effective entrance into the issuing market. Because right now it could be that for many use cases, at least that's the feedback we're getting, the stakes and the kind of overall effort required and the cost kind of set up front as a barrier of entry into that market is too high for many actors to consider, especially if they are the authentic source for just one very simple thing they might want to issue, right? So it's not their core business to do so, but for many that just have that valuable information, it should be easy to set that up as a side business, and that probably has a huge potential.
May I react to Kai's intervention? So regarding the first part on how the attestations, the formats, and all these things will be discussed and are under discussion in the toolbox process. So the formats that the wallet will support and the formats of the credentials that the reliant parties will expect will all be defined in what is the toolbox process. So this is part of the standardization. So from that part, I see that it might be also easier for the uptake, not to think that the wallet will be able to, let's say, adopt any kind of or to share or to include any kind of attestation that it's defined. And regarding the last part, sorry, I lost my chain of thoughts. What I wanted to say is of course, you know, that the wallet not only requires to interact to qualify trust service providers, but also it could include non-qualified ones. And these ones, of course, does not need to fulfill the requirements that the qualified will need to. So this will potentially be easier for some issuers to have to intervene in the ecosystem, and that's what I want to say.
Thank you, Maya. Maybe we can open to the panel as well to share any thoughts on what the wallet should look like to meet user and market needs within the constraints, of course, that there are.
Yes. Kai was speaking about Apple Wallet a bit before, which is an example for what a wallet should look like. And I think something very important is beyond legal, beyond technical, is user experience. Because you don't want the wallet to be something unusable, that you don't know how it works. You want to handle the lifecycle management, like Kai was saying. If I'm losing my phone, I want to be able to restore my wallet very easily. So I think the real winner will be the one having good user experience, very important design process. Even more if you think about consent, because GDPR will apply, of course, and people will need to consent to sharing attributes, depending on the legal theory you want to apply. And if every 10 minutes you are requesting to consent to sharing these attributes, you will have the same consent fatigue as you have when you are online and you just want to check a web article or something. So I think that's very important for us as eIDAS, the privacy working group. We are already thinking about that and thinking about legal mechanisms to maybe prevent this consent fatigue, but user experience will be key.
Yeah, maybe adding to that perspective of user experience being an important factor, what we will likely see is 27 wallets minimum, right? So for all the member states, there will be one wallet per member state. And while they are all built on top of the toolbox specification, they will still likely vary to some extent. And they might vary because the national eID scheme that is implemented in that national wallet is requiring a different user experience from one member state to the other. And there's likely a bunch of different ways of presenting attribute attestations and having people use remote signature services. So a huge potential, I think, that lies in the process that we're having right now with the large-scale pilots, where many member states are already engaging on solving the same use cases in parallel together, is in really establishing a dialogue about agreed standards and agreed kind of best practices for the user experience of these wallets. And another factor that will help very likely in kind of meeting market needs and actually driving adoption for this wallet. And by driving adoption, I really mean people using that voluntarily and not because they're forced to file their taxes, right? This is a very huge difference because I can use my national eID just to do the necessary e-government chores, and I can use a national eID system to do much more if it provides me access to much more, if it's enjoyable, right? If it's a pleasurable experience and if it actually meets the kind of experiences that I have with other solutions like the ones I mentioned before. So here again, I want to point out to the third position we mentioned earlier, and that is the allowance for competition of different wallets. So yes, the wallet is provided for free to citizens, and yes, there should be a very, very clear separation between the data in the wallet and the potential business model that a wallet issuer might have as well in their offering of that solution to the market. So there should be clear distinction and separation of that. But we still think that there is a lot of value in providing choice to the user, just because users are also having very different demands against a wallet. There's different user behavior from generation in terms of which kind of language context or kind of regional context you might be coming from. There's huge differences in what people are expecting from a solution, and that should be represented in the market.
Very good. I'll add another example because that seems to be my trend here. To Kai's point of, the wallet might be 27 different flavors of that. And early on, I'm just looking at my notes when Maya said that the wallet is an app on a smartphone, right? So in the U.S., we have now Maryland, where I live, was the second state to have a mobile driver's license that Apple Wallet supports, second to Arizona. Well, to Kai's point, there's 2 states now that have 2 different apps. Now, those apps reside, they're MDL apps, right? They reside in the Apple Wallet, but the Apple Wallet is a container to do very specific things, right? To provide, the Bluetooth low energy interface or the QR code interface, but it's the app that provides this user experience that my co-panelists here are talking about, and that's what's going to be important, right? The container that it sits in is subservient to that, but it's the app that's going to have all the bits that are specified in the legislation, the auditability, the informed consent, and all that, and that's what's going to be key to make it user-friendly and useful for adoption.
Yeah, and I think it was Mark on the last panel that said that we want to forget about blockchain, we want to forget about VCs, verifiable credentials. We just want to have something that people can widely use, and they don't even know that there is a DLT behind it. They don't even know that the standards being used are W3C or whatever standards will be used. And I think that's very important for this to be widely adopted and for people to forget big words like DLTs, blockchain. The important, like Kai was saying at the end of the position paper, is that principle of SSI are implemented with user-friendly and user-centric products.
Thank you. We're nearing the end, so perhaps one last topic to discuss before we have quick closing comments from everybody. We've talked about some of the risks here, but maybe we can give everybody a chance to comment what they see as the main risks related to the wallet based on the debate that's currently going on and the proposal that is out there. Are we missing any important safeguards? Are we approaching the private sector in the right way, etc.? I don't know if our panel members want to comment on this.
So risks, we kind of talked about them, and Maya mentioned that it's a very aggressive timeline. So there's a risk of meeting these objectives, the timeline, and getting everything in place in the time allocated. I think that's the other risk component is these standards are emerging. Europe is definitely pushing the envelope on this, and yes, the MDL specification is out. There's actually 6 parts of it. The one that everybody addresses is part 5, the application. But even it, when you talk about getting to the risk, well, they say that issuing an MDL, to get the MDL from the issuer to the wallet, is out of scope for that specification. That's a risk, right? If we're going to say use the MDL spec, well, it's not fully there yet. And W3C standards, standards are emerging as well. So I think those are the risks. Getting too far out front is the big risk to me.
To me and to INADBA, I guess, as general, that's in the position paper that Kai was presenting. One of the risks is also to exclude one part of blockchain industry, DLT's industry. If we forget about public permissionless blockchain, there are as well trusted record, trusted ledger, and of course the regulation, and it's normal, apply mostly to permission blockchain. But we don't want to forget this ecosystem, this trust ecosystem as a whole. So we made a proposal in that sense. But to me, it's a risk because this ecosystem is brilliant, strong innovation, and we don't want to exclude totally this trust ledger as well.
Yeah, speaking of risks, we kind of go into very different domains, I feel. But the one that I want to also kind of come back to from our policy position is this question of how to safeguard against verifiers or relying parties asking for a bit too much, right? And usually citizens find themselves in a very problematic power position, right? You're a user, you're standing in front of the gateway of that huge service, and they're asking you for everything in your wallet, right? They're asking you for every single credential, attribute attestation, PID on your European digital identity wallet. That's probably the worst case scenario, right? Because you don't want to provide a hotel booking website with each and every credential in your wallet. You only want to provide your MDL to the car sharer, your passport data to the particular hotel check-in counter and not to the platform itself, right? Because the platform in between that's just handling booking doesn't need that information. So there needs to be a system in place, and I think there is already some hints at that in the proposal, but I think it's, to what we read and how we analyzed, it's not yet developed enough. A clear safeguard structure that is setting boundaries to what relying parties can request from the wallet, and that is establishing a clear procedure of how to get the allowance to request certain things from the wallet, right? This has to be easy. This has to be cost effective. Otherwise, the relying parties will not enter into that ecosystem. So there's a huge kind of thing that has to be balanced here. But the need to safeguard users from those kind of illegitimate requests will lead to adoption, and will actually, I think, will be one of the decisive factors of this kind of wallet technology of being trusted by the citizens, right? We had, and I kind of come with an example of the German eID system, which is in place for 12 years now. It allows for selective disclosure, has zero knowledge proofs about age and stuff. So it's a very sophisticated technology, and it's been proven to be secure over and over, has not been hacked until today, and less than 5% of Germans use it. And the reason for that is not that the system is terribly unusable. Actually, they have improved user experience in the past years. But one of the biggest factors very likely is that the start of the launch of that new technology was really hit by a campaign of distrust, of critique, of exaggerated criticism that basically destroyed the starting chances for that technology in the German market completely. And still until today, almost no private entity which could actually accept this national eID and use it for strong customer authentication uses it, just because they know it's not met with the feeling of trust and being a simple solution by their citizens and by their customers. So for the European Digital Identity Wallet, as one of the main factors and one of the main risks in view of that experience, is that it's very much from the first moment regarded as a safe, privacy-preserving and easy-to-use technology, and that it never kind of ends up in that sphere of potentially this is the European surveillance mechanism #1, and this is the kind of Orwell's eye in my phone, right? So there's a huge point in avoiding that risk and making sure communication and transparency is achieved.
Maybe I can react a bit on the risk exposed. Thank you very much. I'm not going to, let's say, propose any other risk. What I want to say is that we are from the Commission. We are, and also member states have pointed out this risk. They have the one of the timeline is there. We are trying to, let's say, mitigate as far as we can that one that it's a bit imposed, but for the other ones, what I wanted to say is that these discussions are either on the toolbox process or on the legislative process. So this is not something that is forgotten, and is under discussion on the member states, even on the technical group or in the regulation discussions.
Thank you, Maya, and thank you, everybody. I think we can do a very, very quick round of final thoughts. I'll suggest the order be Daniel, Kai, Paula, and we'll close off with Maya, and then we'll head off to lunch.
I'll just leave it at, these are exciting times. The EU is doing a lot to push this forward. I help out a bit in Canada on the Trust Framework Expert Committee, and they're trying to come up with a wallet, and EU's out ahead, and I'm happy to help contribute.
I can just join into that probably with the invitation for everyone to engage with this topic, potentially at INATBA. So feel welcome to join our working group on the topic. We'll promise and surely be doing a lot of advocacy work and also education work on this topic in the next years, because this will follow us for a while. And also we're incredibly grateful for having the opportunity to meet in this group today, and also having this audience to discuss and then deliberate, potentially also during the coming lunch break, the topics we've been bringing up here. Thank you.
Yes, I think that's indeed a very exciting time. Being a stakeholder of this proposal is a really amazing process, complicated one, I have to say, but very amazing process. So let's stay hopeful for the timeline, and hopefully we're gonna have an amazing EU wallet soon. Thanks.
Yeah, and
Maya, do you wanna share a closing thought? Yeah.
Yeah, no, only thank you for having me here as a panelist, and this has been quite a process since not since the proposal was there, but just before preparing that, and I think that we still have very challenging months and in our future, but we are thrilled on what will be coming from this big project.
Thank you, Maya, and a big thank you from the Blockchain Observatory and Forum to all our panelists for the excellent points and interesting discussion, and a big thank you to all of you. I'll hand back to Tonya now.
Thank you also very much for this very interesting discussion. Because we had a technical problem earlier in the previous panel with the message of Mrs. Kaili, before going out to lunch, we are going to show the message. So if you'd like to stay and view her message. Thank you.
So we'll now have our lunch break, and we'll be back at 2:30 for the next panel. Thank you. All right, welcome back, everyone. Our next panel is on a very hot topic, the Metaverse and Web3. So I will ask Nikos Kostopoulos to lead the discussion.
I'm audible? Yeah. My apologies for the technical problems. For the third time, I'm excited to welcome Jeff Bandman, Principal of Bandman Advisors and fellow lecturer of the University of Nicosia, Dr. Ingrid Vasiliou-Feltes, the CEO of the startup Softhead, Dr. Ioannis Revolidis, lecturer of Media Communications and Technology Law at University of Malta, and last but not least, Leonardo Calini, Public Policy Manager, Economic Policy at Meta. I would like to invite our speakers to introduce themselves more extensively.
Well, first of all, my name is Ioannis Revolidis, and as Nicola said, I'm a lecturer of technology law at the University of Malta. I'm also part of the Center for Distributed Ledger Technologies, which is an interdisciplinary team that conducts research, teaching, and other activities in blockchain and other DLT technologies. And mostly I would like to thank the Blockchain Observatory and Forum for the kind invitation that extended to me to be part of this panel. Metaverse is a very interesting topic which we have been researching lately. Personally, I have been more looking into NFTs, so I would be very happy to elaborate on such issues.
And my name is Leonardo Calini. I am part of the EU Affairs team of Meta. I joined a company called Facebook a year and a half ago, and half through this experience we sort of changed name and now we're Meta. And I'm very excited to be here. I also wanted to thank the Observatory for inviting me and looking forward to the discussion.
Thank you, Ioannis and Leonardo. Maybe we have with us Dr. Ingrid and Jeff.
Yeah, Jeff, go ahead.
All right. Good afternoon, everybody. Yes, I'd also like to thank the EU Blockchain Observatory and Forum for having me. Looking forward very much to this discussion. Yeah, per the introduction, I'm part of the IFF at UNIC, where I teach courses on law, policy, and regulation of blockchain, as well as on anti-money laundering, and do training for law enforcement and FIU professionals in that area. I also have an advisory BAMN Advisors that focuses on fintech and digital asset issues. I work with both businesses and governments in that area. I'm on the ESMA's Fintech Advisory Committee, or Consultative Working Group for their Fintech Standing Committee. I've also been advising the Republic of Cyprus on new national blockchain legislation and anti-money laundering, and also their supervisory framework. I was previously a financial regulator at the U.S. Commodity Futures Trading Commission, where I was kind of one of the earlier regulators to work on digital assets. And in the context of Web3 and the Metaverse, I work with a collector and thought leader of NFTs who advocates for an open Metaverse and also operates an NFT asset management business.
Thank you. And I'm Dr. Ingrid Vasiliou-Feltes. In addition to being CEO of Softthread, I'm also the founder and CEO of Institute SAY, which focuses on science, entrepreneurship, and investments. I'm also serving as the Chief Innovation Officer for the Government Blockchain Association, which is an international not-for-profit organization. And I'm volunteering with numerous United Nations affiliated groups that are all revolving around deployment of deep tech. I also have the opportunity to work with colleagues on deploying and consulting on digital ethics, specifically not only blockchain, but also blockchain combined with AI. And more recently, of course, a lot of buzz around Web 3.0 and quantum technologies. I will also draw today on my experience in the teaching ecosystem. I have the opportunity to teach in an executive MBA program where I lead the digital transformation class at the University of Miami.
And I'm also faculty of the World Business School, where I'm a part of the entrepreneurship department. And I lead the Chief Innovation Executive course that focuses heavily on deployment of deep tech. Thank you for the opportunity. I would like to thank also the hosts and organizers for this event. It's exciting, and I'm looking forward to a dynamic discussion.
Thank you, everyone, for joining today. Each of us has a different understanding what is Metaverse. Is it a gaming platform, a virtual retail destination, a training tool, an advertising channel, a digital classroom? It's the future of the internet, or let's explore today. We're going to start with the first session out of 5, an intro about the Metaverse. I'm going to ask Jeff, how would you explain the Metaverse to your parents?
Yeah, I suggested this question. Thank you for the question, because I think that the idea of just what is the metaverse can be very daunting for people, and without typecasting my parents specifically, but I think it's helpful, I think, for most people to have a starting point for how to think about what is the metaverse, what does it mean to you, because the leap from our daily lives today, where we sometimes look at our phones and sometimes look at our computers and sometimes look at TVs, or we can put on these headsets and go into these alternate environments. It seems like a pretty big gap between the two. So I think a good way to start thinking about the metaverse for most people is just to think of it in terms of the screen time that you spend. And if you look back over the last 5, 10, 15 years, we had desktop computers, we had personal computers, we had phones and tablets, and then the quality of the experience that we have on these devices has been evolving, both the actual experience while we're looking at it, as well as all the technology and speed of processing that's happening in the background. When the pandemic hit, people started doing Zoom calls. They started using, and other similar platforms. So I think a good starting point to think about the metaverse is, it's your Zoom calls, it's your time on your computer, but the quality of it is going to continue to evolve. It's going to become more three-dimensional, whether or not you're using an actual headset or goggles or some sort of way of looking at it. And the time you spend in that space, will continue to evolve. So an example I would use, again, to explain it with my parents, is that, every week, twice a week, actually, they play a card game called Bridge with another couple, and they're looking at their screens. They're all in different rooms, and, they're playing this game very competitively. And sometimes the way the program works, if one of them steps away, a robot comes and takes their seat. So 5 years from now, when they're playing Bridge, instead of just looking at screen, they might be in a virtual room, and there might be representatives of themselves, which are avatars, and those avatars will be things that represent you. And since it's your avatar in that room, maybe you're going to want to have hair that looks like yours, or clothes that looks like yours, or accessories that look like yours. Maybe you want the table that's in there to resemble a table that you guys have used. And maybe you want custom furniture there, so there will be a need for somebody to start to design cards and card tables. So I think a good way to start by thinking about the future, it is both the way we will experience technology, but then it is also the way we will have social networks. Our social networks will kind of move and evolve from where they are into spaces that are better technologically, more evolved technologically, and have kind of more intensive and immersive experiences.
Thank you, Jeff. Then I'm going to ask Leonardo, who is a representative of Meta, formerly Facebook. What is the Metaverse? Meta is becoming the biggest investor in the industry.
Thanks, Nikos. I think, Jeff, you gave a really good explanation sort of what the Metaverse is. I think as I also really like the question, so I also try to explain sort of how would I describe the Metaverse to my parents. Essentially, it's the next way we all going to experience the internet in the future. I think the internet experience has evolved sort of quite dramatically over a short amount of time, relatively short amount of time. we used to have computers, like big computers in our basement or sort of somewhere else in our house. And then we started having laptops on our desktop, and now we have sort of computers in our pocket. And sort of the next way internet can be experienced in the future is by having a pair of smart glasses that are sort of mixing VR and AR experiences. For VR, I mean virtual reality, and for AR, augmented reality. And that's gonna sort of bring sort of a whole new opportunities when it comes to accessing the internet, because you're not gonna have a smartphone anymore in your pocket. You're gonna have a smart device, smart glasses in front of you, and you can project sort of your news. You can project sort of, you know, your email, whatever it's in work environment or in a personal environment. It's a more immersive experience in which you're gonna access and surf the web. It's something that I think it's important to keep in mind is that this is not just about gaming. It's really important to understand that. Just myself this week, I have experienced what the metaverse can be in the future. I'm furnishing currently my apartment, and I had to fit a sort of IKEA table in a very narrow space of my house. And by simply downloading an app, which is available to all of you, the IKEA app, is based on augmented reality. You can essentially scan your room, and you can display a digital table in your space to see whether, first of all, like if the table is fitting in that space, sort of a real sort of, you know, with the same size of a physical good, you have a digital table in your room, and you can see whether that's fitting the space. So when it comes to sort of our plans on the metaverse, I brought here with me sort of the device that it's available today. It's called Oculus Quest 2. This is very much resembling a gaming device, and I really agree with that. But so this is something that it's much more like virtual reality. So you put the headset on and you step into the virtual world. So it's something that is much closer to sort of gaming. But you have to imagine a scenario where you remove sort of, you know, this part of the screen, and you can see what is around you, and you can sort of display holograms and virtual assets around you. So that's really our plan. And we made the first step towards a smart glass with Luxottica, an Italian company. Being sort of an Italian myself, it's been sort of a real pleasure to see that partnership sort of take life. And we are working towards a smart glass which would resemble as a pair of Ray-Ban, but which will enable you to sort of surf the web as Jeff described and as just described in more immersive ways.
Thank you. Then my next question to Dr. Vasiliou. We have a lot of representatives from the enterprise world. How will businesses monetize metaverse in the future?
Great question. Thank you. Well, I would like to preface that no matter what we think about from a business model perspective, it must be associated and complemented with novel financial instruments and novel investment instruments, because otherwise that whole new ecosystem will not work. And of course, as we've referenced many other times during our conversations, it must be also accompanied by appropriate digital ethics, so that we make sure that these novel interactions that we're describing in this new ecosystem are happening according to the ethics values we all want to uphold. But definitely, metaverse, it's at a unique intersection between the economy, society, the environment, and the novel business models mirror the needs of these three. They will all need to address sustainability. They will all need to address data monetization and data ownership. They will all need to address privacy in a whole new way. Like we just described, there will be a high level of interaction and immersion in these new environments, and the seamless transition at times between what you own in one world versus in the virtual world versus the physical world. So not only data ownership, but also property rights and all the other elements that we'll talk a little bit later will have to come into play when we design these business models. Additionally, I would like to highlight that the Web 3.0 powered business models that will shape this metaverse and omniverse will also have to make sure that they capture all the elements and all domains within the life cycle, from value proposition, value creation, capture, and then also going back to the recovery cycle. And last but not least, I know we all want to talk about data monetization. So it's really important for these new business models to allow for creative ways to monetize the data, but also uphold what we worry very much about, which is data ownership, data provenance, data transparency. I know all of us are always hearing about the creator economy and the sharing economy. They seem to be forecasted as the predominant form of business models in this new ecosystem. But I also think that omni-channel platforms will continue to be strong given the current trends we see, because e-commerce is going to only grow given the metaverse and all.
Thank you. We're moving in the next set of questions, answering if a metaverse can exist without moderation. Who is setting the rules for a metaverse? The first question is going to be addressed to Dr. Volidis. We're moving from net neutrality to metaverse. If you want to share some thoughts on metaverse governance, if a metaverse can exist without moderation, and who is setting the rules?
Thank you very much for this question, Nikolaos. And yeah, I personally think that this is an important dimension of the entire discussion. I was very much impressed by what Jeff and Leonardo mentioned about what the metaverse might be. But I think there is a thin line between the metaverse being just another digital product and being a genuine paradigm shift or change. And a very important element in this process, as you mentioned, is who gets to define who does what and how do we move around the metaverse. And now I will need to go back in time a little bit and remind something. When 30 years ago we were discussing about the governance of the internet, I remind everybody that there was a huge debate whether regulators and legislators will be involved or whether we shall let the internet community govern itself as it sees fit. And at some point in the early 2000s, we decided to go somewhere in the middle. But what is important from that experience to remind is that when it comes to the internet as we know it, many key governance decisions are not made by regulators, are made by the internet community itself. But when I say community, private commercial companies are not involved in this process. We have institutions that are mostly non-profit, and these are those that set the rules. For example, the fact that we have TCP/IP was not decided by commercial entities, was decided by a group of internet enthusiasts that set the standard. So the question is, if we want to transfer ourselves into the metaverse, shall we kickstart a dialogue within these lines? And do we want the metaverse to be open, or do we want the metaverse to be fully commercialized? Now, of course, both versions will come with benefits and drawbacks, right? I'm not here to promote a certain version of the metaverse, mostly though to raise the awareness that this is a key question that needs to be decided. Of course, if you were to ask me what my preferred version would be, that would probably be of an open metaverse or as open as possible, right? Because I think that this has made the internet thrive. And this has been a key factor of the free exchange of goods and ideas within it. Nonetheless, what I find interesting is that in all these discussions about the metaverse, nobody is raising this issue. And I think that before we move there, we need to openly discuss about it.
Thank you, Ioannis. I have seen earlier today that Jeff is really anticipating my next question. So I'm going to ask Jeff to describe how open metaverse is different to a closed metaverse.
Thanks for the question. And yeah, I agree, I think, with a lot of what Dr. Roboldis was saying, particularly in the, last part of his comments. Sort of describe, I think, are the difference in attributes between an open metaverse and a closed metaverse. And I'm also very much of the view that an open metaverse is better for society, but not necessarily a fait accompli. And there will be a lot of parties who will be trying to establish a closed metaverse. I believe including Mr. Kailini's colleagues and associates at Meta. So what are the differences between a closed metaverse and an open metaverse? A closed metaverse will look a lot like what people experience when they use the internet today, and will really have the attributes of what people think of as Web 2. So in a closed metaverse, in a Web 2 environment, think about your experience when you use Twitter or Facebook, or you get a book from Kindle or an audiobook from Amazon or music from Apple. You don't own the things that you don't own your digital objects. You have those under some sort of end user license agreement. You can be deplatformed by the platform. Your access to it can be revoked for a variety of behaviors. Your statements that are made on there can be censored. They can be removed. And partly it's because in a Web 2 environment, in a closed metaverse, what you're experiencing is a service, and the service is operated by somebody. Typically the service, even if the service is free to you, they have some other commercial model, whether it's your activities, your data, information that arises from their advertising. Not to say that the metaverse won't have commercial realizations, but those are the attributes of a closed metaverse, and they would look a lot like Web 2. What are the attributes of an open metaverse? So there are several that are important. First of them, I'd say not only is it a creator economy, but it's an ownership society. It's one in which you own your digital objects. Somebody can't revoke them just because you've using the service, or they feel that you violated the terms of the service, or you don't renew your subscription, and therefore you lose not just the rights to new ones, lose the old ones. So NFTs, non-fungible tokens, are a form, maybe the form of digital asset ownership, and that also is a basis for creator economy. So in an open metaverse, you own your data, you own your digital objects. Typically, governance, instead of being done by the proprietor or operator of the service or the platform, as in the case of the Web 2 examples I gave before, typically, economics and governance will accrue to the users of the platform. And there's all sorts of experimentation taking place right now, with governance tokens. Some of this is taking place in decentralized finance, but decentralized finance is just one form of decentralization, and the ownership and governance, maybe through tokens, maybe through other models, will pertain to the users, and there will be, because these will be a protocol rather than a service, there will be, let's say, an open technological basis. The technical term for this is sometimes referred to as composability. I like to think of composability, again, if I'm trying to explain something like this to my parents, as something like Lego blocks. It lets you stack and mix and move things around. Whereas a closed metaverse is like a Web 2 walled garden. You can't take your digital objects in and out of these spaces. So, I'd say if you're trying to figure out whether a model that you're looking at is a kind of a Web 2 or Web 3 model of the metaverse, an open or closed model, look at, ownership of digital objects. Can you buy and sell them? Can you move them between platforms? Is something a platform or protocol, or is it a service? Who controls the data? Do you own your things, or do you have them under? And can participants in the ecosystem participate in economics and governance, or do those accrue to the platform operator?
Thank you, Jeff. And then I'm going to ask Leonardo if Metaverse can build just by a single company, or if Meta will make it and be the single operator. And if you can share more about Meta's vision for governance of Metaverse.
Of course, thank you very much, Nikos. I very much agree with what Ioannis said earlier, that the metaverse, there's only one way to have an open metaverse. I think, Jeff described very well sort of the fragmented experience that users are having on the internet today. You need to have, an account for sort of surfing across various services. each, like, for example, if you want to experience Facebook, you want to experience Twitter or Instagram, so on and so forth, you're required to have an account sort of with each individual service in order for you to use that. And if we sort of apply that to the gaming industry, for example, if you sort of purchase a good in a given game, you cannot sort of transfer that sort of to another game. So it's a very fragmented experience. And I think that one of the best things about the metaverse is that it really brings sort of that human component when anything that's belonging to you, like in a physical space, you bring it with you, and sort of replicating that experience in a digital space opens up sort of tremendous amount of opportunities. And I really think that that's sort of the direction that I think industries and sort of are taking at the moment. Just it was fresh news that there is the first standards group currently being formed, sort of gathering hundreds of companies. And, you know, answering to your question, it's just going to be built by one company. Far from it. There is a sort of vibrant ecosystem of players that are currently exploring the metaverse. Also this week, one is the news about Siemens and NVIDIA sort of working together to bring in the industrial metaverse. And I think, as I mentioned, there's plenty of opportunities, but also we have to be very mindful of the challenges. I think there's something clear, I think, is that the metaverse will only be successful if it is developed responsibly. When we announced the metaverse last year, sort of we announced for how it will be in 10 years' time. And that was precisely to address one of the challenges that we saw when it comes to regulation of digital spaces, that the law often has to sort of catch up or sort of fix the issues rather than trying to prevent them. And I think that there can be a scenario where you have an open metaverse, but you also have an open metaverse where there are clear rules and sort of there is an incentive for companies to develop sort of services and products that are meant to sort of be value additive to the users. I think there is, at the moment, there's a lot of disruption. You know, we are at the stage when we are sort of building the hardware, as I mentioned. And this is exactly the moment we should have a discussion about how would we want sort of this experience to be in 10 years, also from sort of an ethical and sort of a regulatory point of view. I think there are certain things that are very much clear. One of them is that as we're disrupting a lot with this technology, that there should be sort of a guiding principle, like we have to really set boundaries about what sort of this experience can be and what it cannot be. One of the things that we have in mind is that sort of we should not sort of innovate just for the purpose of innovating. You really need to sort of use this technology whenever you see a clear sort of added value for a user or for an organization, and you need to have a system of rules in place that sort of favor those types of innovations. So we are thinking very carefully and very thoroughly about sort of the governance for the metaverse, but I think that's sort of also something that governments they must do now, as they are sort of, you know, we are sort of exploring and we are in the exploring phase. But it's good that we're starting now, so that in 10 years, when this will become possibly mainstream, we already have the set of protections that are needed to sort of protect the users.
Thank you, Leonardo. I'm going back to Jeff for the third type of questions to discuss about NFTs in the metaverse. And I want to ask Jeff why NFTs are important for individuals to own rather than license their digital assets in the metaverse.
Yeah, sure. Thank you for the question. Yeah, and I should have mentioned at the outset, by the way, the University of Nicosia has actually launched a Metaverse Studies program, and we'll be offering later this year an open MOOC course in the Metaverse. I believe it's the first university in the world to have done this. It's also the first university to have a Metaverse study, to accept Bitcoin for tuition and to offer a digital currency degree granting program. So I should have mentioned that earlier, but for people who are interested in learning more about this subject, that will be a great resource for them. Sure. So NFTs, we discussed in the kind of earlier answer, and I think there's consensus among the panelists that it is a good thing for people to be able to own their digital objects in a way that they don't today in Web 2. And for them to be able to move them with them from platform to platform. Now, just because some of us think that's a good idea doesn't mean that necessarily is going to happen, right? People in the future or in the present who want you to use their service, want things to be sticky. So there's a commercial tendency to have things that are more like walled gardens, or think about sort of the company towns where, the only place to get housing and the only place to get food was from the company. And it's a great economic model, for the proprietors of those walled garden or closed metaverse type systems. So what is going to be the mode of ownership? So people, so NFTs, non-fungible tokens, I think are going to be, the mechanism through which this happens, and will really be kind of the transition layer that gets us to Web3 in an open metaverse. Now, when most people think about NFTs, they think about it either as, some pictures of kittens from when there were CryptoKitties, or they think of it as CryptoPunks and apes, Bored Apes, or they think of it as some generative artwork. And so, there's been a lot of hype around these, but it's like, well, why does artwork, or why does a picture of an ape or a punk, what does that have to do with Web3 and the metaverse? Why is that important? Well, the other way to think about non-fungible tokens is it's property rights. It's something that is provably unique and provably non-fungible. The smart contract is visible and demonstrated and proven on the blockchain. And then the ownership and provenance of the object is proven that way. And so, it has started with art and collectibles and gaming. That's just the initial wave, but non-fungible tokens can be applied as a technology and mechanism to anything that's non-fungible. And when you think about the world, that many things, and what we've seen primarily in terms of the blockchain and digital asset space, it started primarily with things that are fungible, which resembled currencies, which resembled money. But most of the world is non-fungible. You, yourself, your friends, your hair, your pets, your clothes, your room, your furniture. Even the table that my colleague was putting together, once it's been in his house for a few days, it will acquire its own personality. All of these things in our lives are non-fungible, and this will include, access to events. This will essentially come to be linked to things like types of personal property, physical property, and so on. So we're at the very, very beginning stage of this. But as we exist and spend our time in our digital spaces and have things that are uniquely ours, whether in the digital space and increasingly in the non-digital space connected with kind of the physical world, non-fungible tokens will be the way this takes place. And I think that over time, looking at it financially, the market capitalization in the aggregate right now of non-fungible tokens is quite small. Before the recent kind of corrections in the digital markets, it was maybe no more, half that or less. Right now, we have time, the value and implementation of non-fungible tokens will greatly exceed fungible tokens as more and more of the world reflects ownership through this technological mechanism.
Thank you, Jeff. Then the next category is going to be metaverse and mass adoption. I will start with Dr. Ingrid to discuss about digital ethics for mass adoption.
Thank you. And I'm compelled to build upon what several speakers highlighted today. Before we can talk about ethics, we must also talk about the requirement we all have as a society to do better at digital literacy and digital fluency for users of this new environment. As we've highlighted, there are all these new ways to interact and new terminologies that will cause a lot of confusion. And therefore, I worry that even the first step in this new digital economy is informed consent. So I always like to highlight that we need to make sure that the way we interact, not only as businesses, but also as individual users, and then when we create this new governance structure, we need to make sure that digital informed consent is appropriately addressed, because otherwise everything else we talked today will not be appropriately handled. After we make sure that that's done properly, We should also think about creating, and I think it was referenced already a little bit, not only the need for an overall governance structure, but maybe we already need to proactively build a code of ethics for Web 3.0 and metaverse and omniverse environments, and be proactive and create a bill of rights for this new digital economy. Because I think we heard earlier, we don't want to be reactive and always late in the game to catch up with all these, not only regulatory and tax elements, but also with the digital ethics component. And then I think the part that I always like to emphasize is, besides all the typical digital ethics components that we've been accustomed to doing over the last few years when we deployed emerging technologies, I think it's really important this time to also think about building a culture of digital ethics, because like we already referenced, our children, we currently that are experiencing this transition, future generations all will be surrounded in this new immersive environment. And it's really important to create that culture of digital ethics, because it will be transcending not only our home environment, but also our work environment, the way we educate our children, the way we interact among each other, even in this new virtual world. So I would like to highlight a few more things from a digital ethics perspective. If we have the Bill of Rights, if we have the Code of Ethics, if we're mindful and deploy everything proactively, it's also really important to make sure that we harmonize this digital ethics code with all our other regulatory guidelines, with the way we assess risk, with the way we measure things. So very important to align the proactive digital ethics component with the way we measure, for instance, ESG consciousness. Otherwise, we'll have chaos, and we've seen what happens if we do things too late. It's very difficult then to integrate and find a way to have all these be effective. The only other major point I would like to make that has come up in my daily life when I try to deploy ethics programs is, I would caution that it's really important to also have a proper cyber resilience program for this new Web 3.0 powered metaverse and omniverse. Just the traditional cybersecurity is not gonna make it. And I would like to propose that thinking about more inclusive, more comprehensive models such as zero trust are maybe better ways to think about creating this cyber resilience for this metaverse and omniverse experience. So overall, again, proactive, addressing all the facets, and then of course, making sure that data privacy, data transparency, accountability, and data ownership are appropriately addressed for all users, so in an equitable way. Thank you for the opportunity to share a few thoughts about that.
Thank you. I fear that we're very far away from mass adoption, but already a couple consultants and legal scientists are concerned about the average user and how they're going to interact with the metaverse. I'm going to ask Ioannis, what are the general concerns as regards to the average user and the interaction with the metaverse?
Thank you very much. I think better now. Now, to answer this question, I will have to do something that for a legal academic is a little bit risky. I will have to speculate a bit, because in order to talk about regulation and regulatory problems, we need to know the business model we're about to regulate. In the case of the metaverse, it is difficult to know the business model right now, because talking about the metaverse in 2022 is like talking about the internet in 1985, right? So, but having said that, I am willing to assume partially this risk, because unlike 1985, 20 years ago, we have went through a first phase of regulating digital markets. We at least have the experience of the e-commerce directive, and of course, the Data Protection Directive, which later became the GDPR. And I think it is a testament, especially in the case of the e-commerce directive, it is a testament of the wisdom of the regulator 20 years ago that it took almost 20 years to amend the e-commerce directive, which means that for 20 years, the standards set at the time were valid enough. Now, having had this experience which are the two primary fields where by instinct a legal academic would say that we need to talk about? Well, the first would be, of course, e-commerce. And again, I will need to draw from the experience of the e-commerce directive. When the e-commerce directive was created, the idea was to allow the average user of the internet fairly to interact with this new environment. In essence, if one looks at the e-commerce directive, the average user of the internet is treated as being digitally illiterate, which, of course, our personal pride might not accept that, but at the time, it was a wise decision, because nowadays, we can just tap on our Amazon account on our mobile phone and order something, and we are familiar with the process. But 20 years ago, these things were unthinkable. People were used to shop in brick and mortar stores, right? Now, by the same token, I would say that something similar might be necessary for the metaverse, especially if this Web 3.0 environment will operate under smart contracts. And I think that once more, the legislator will have to treat the average user as digitally illiterate. And what do I say so? If we talk about smart contracts, that is putting rights and obligations not in human language, but in code. And there I ask the question, how many present in this room can read a smart contract that it's written in code? I admit instantly that I can't, and I'm afraid that might never be. So the question is, if we have somebody who buys from a digital market that operates on smart contracts, how is this person able to understand the terms and conditions? How do we make sure that the person that is exposed in this environment will make the right decisions? Now, of course, we can give to this person information, right? But what I'm saying is that we need to be aware of the fact that Web 3.0 will create a new wave of digital illiteracy. And the regulator needs to take that into account. And the second issue that I would like to raise is, of course, the issue of privacy. It is a funny coincidence because 20 years ago, these were the two major issues again, right? So again, I'm raising the same. But when it comes to privacy and data protection, first and foremost, I talk about commercial privacy. I'm not talking about state surveillance or surveillance for security reasons and such. I'm talking about purely commercial surveillance, about monetization of personal data from the companies that offer the services. Now, of course, we have the GDPR in place, and we might agree or disagree for the one or the other element of the GDPR, but we will say that all in all, it is on the right spot, right? The good question in a Web 3.0 environment would be, if Web 3.0 has the attributes of DLT technologies, if, for example, it is decentralized, can we transfer basic GDPR axioms there? I mean, the GDPR operates on the basis that we're always able to identify a data controller. But who is going to be a data controller, for example, in a permissionless blockchain environment? That might be a tricky question to answer. Now, I'm not necessarily implying that we will have to amend the GDPR instantly, but we might come up with the challenge that we will have to interpret it in a way that will be able to take account this element as well. And there is a last element about Web 3.0. While in Web 2.0, the risks to privacy are high, in Web 3.0, I would say they step up a notch because the volume and the quality of data that is going to be gathered there is unprecedented. Therefore, again, we will come down not only to the data subject rights, but also to enforcement. And these are issues that I can speculate already now that they're going to be very interesting. And again, shall we redo the DSA Act? I mean, it has not even been enacted yet, right? Or shall we redo the GDPR? I don't know. Personally, I am a legal academic who is very skeptical of always writing new laws. If anything, I would say that I kind of miss the good old days where EU legislation in the area was only 20 pages long and not 380 or something like that. And why do I say so? Because this kind of regulation was principle-based. If one looks at the case law of the Court of Justice, for example, the Court of Justice of the European Union was able to write the GDPR before the GDPR was enacted in many places. And the same happened with the DSA Act. Many of the things that made it into the DSA Act come from the case law of the Court of Justice of the European Union. So that is food for thought on how we possibly might or have to address these issues.
Thank you, Ioannis. Meta is really committed, at least from public statements, to spend 10 billion per year to bring Metaverse into life. Right now, it's definitely something more than vision, since we have working products. But I believe we're quite far away from mass adoption. Also, Meta is one of the social, I believe it's a company that runs several social media, and you have the highest number of users. I want to ask you, when do you expect to reach to mass adoption levels? Obviously, it's just a personal comment and not necessarily represent Meta.
No, sure. Thanks, Nikos. I think the first thing I wanna say is really a good segue from what Yanis was talking about, which I think I found very compelling, and I think it's definitely one of the sort of the challenges that I see in between now and sort of the adoption on a wide scale of these technologies, which is how do you set up sort of the governance framework? And I think it's something that Ingrid also has mentioned. This is going to be a challenge for the reasons that I discussed before, that you don't want to have a system of laws that have to be reformed to sort of make sure that all the issues are addressed. But there has to be regulation in place. I think we can all agree that sort of a metaverse without regulation is not going to be a successful metaverse, because there is a lot of skepticism when you hear something that is close to science fiction. And I think that's one of the sort of main obstacles towards mass adoption. I think you will feel people sort of stepping in and experimenting with the metaverse only when they really feel sort of secure and protected, and they sort of, with a system of laws that can incentivize responsible innovation. So I think for mass adoption, you need to have regulation. I also understand that there is sort of clearly the challenge of constantly updating either the GDPR or the DSA. And I think this is really a space where it's a gap that has to be filled by companies like Meta that have to sort of, proactively address any sort of gap in the regulatory framework with sort of a set of rules that can sort of put boundaries over what you can do and what you cannot do. I think that's definitely a role that we want to play as a company. I think especially learning from sort of also mistakes that we've done in the past. But again, I think our role is important, but the role of regulation is even more important. So it's more like sort of inviting sort of governments. And that's what we're trying to do when we sort of announced it, is that we're really trying to work with governments, sort of civil society, academics, to sort of talk about these issues as much as possible. And it's great to hear from Jeff that there is already university that is having a program on the metaverse. These are all great news. I think there has to be a lot of things that must come together in order to have sort of the adoption of these technologies. But I think governance and regulation in this specific case are really top of mind.
Actually, it's really great that we have two universities. We have worked both with University of Nicosia and University of Malta. Both of them, I believe, they can definitely compete with USA institutions, and they produce great research work. We're proud to have them together in this journey, running the European Blockchain Observatory and Forum, both the universities and the researchers actively contributing. The next discussion is about Europe and the metaverse, is the last set of questions. Obviously, I will start again with Leonardo, and then I will move with the rest of the speakers. 10 billion, how many jobs you are expecting that the metaverse is going to create in Europe? I have seen an article, I believe, that you are planning to create in the next year or within short period 10,000 job positions across Europe.
Yeah, thanks, Nikos. And this is something that, as a European, makes me extremely excited myself. I have my brother-in-law, actually, he's a data scientist in Milan. And when I read the news about Meta announcing that we wouldn't hire 10,000 engineers just in the EU, not Europe, European Union, it's clearly something that makes me extremely excited. And I think that there is definitely one of the reasons. It's not the reason for doing that is because Europe has potential. to be sort of to succeed in the metaverse because of some of the industrial realities that can be really sort of be transformed. There's recent economic studies is suggesting that the metaverse in 10 years will value 440 billions just in the EU. We're talking trillions globally. So there is definitely a lot of potential, and that's why sort of justifying the decision that we would hire over the next 5 years. So it started already last year, so now we have 4 years to continue doing so. Engineers that can do that in Europe. And clearly, I think this is going to be very important also for making sure that, you know, we're very close to sort of the business communities also, that, you know, academia, you know, we're working a lot with universities already. And I think for me, it's gratifying also as a European to know that as we sort of build the metaverse going forward, we know that a strong component will be made in Europe. So this is something that I'm very much looking forward to.
Thank you. I believe Mark Taverner, he mentioned earlier during his panel discussion that Europe needs to run and we need to execute faster in order to catch a trend or maybe the next big thing. Also, Dr. Lul mentioned that Europe has high chances to be successful and be a leader to blockchain, but by extension also to the metaverse. I want to ask Dr. Volidis, from promising to delivering, do you believe that the current European law treats for digital assets can be extended to Web3 and the metaverse?
Thank you very much, Nikolaos. And since you're asking me about NFTs, please let me start by saying that I agree with everything that Jeff said about NFTs in terms of what NFT projects are promising. And also, let me remind or make the statement that the EU in general has made an excellent job in regulating digital environments. It is not a coincidence that it is being considered globally as the regulatory standard, and I think we can all be happy about that. Nonetheless, EU law is not ready for an internet that includes digital ownership, and I want to make that clear today. And why do I say so? When it comes to regulating digital assets, if I would vaguely and generally call them like that, current EU laws represent the philosophy and the business models of Web 2.0. And as Jeff mentioned before, in Web 2.0, digital asset ownership is non-existent. Now, it is not existent not because it was a law of nature. Nothing in social sciences is like, you know, gravity or you know, the forces that regulate the universe. It is non-existent because 20 years ago, again, we made a set of decisions. We decided that our economy will be dominated by powerful platforms that will be in between. And that was partially because we were afraid that if we allow peer-to-peer trading, copyright might erode. So there was, during this period of EU law, an over-reliance on copyright law. And this has culminated 2.5 years ago when the Court of Justice of the European Union decided in the infamous Tom Cabinet case that a company that allows users to lend their digital books to others or try to sell them to others is not distributing material, which is the equivalent to sell something, but it is communicating to the public, which means that the court equated this business model to streaming. But we all know that on streaming, we have no ownership rights. We have only the rights that our accounts entitles to do, which is mostly, and I put it bluntly, renting content. We pay a monthly subscription to rent. We might lose access at any point, right? We know, for example, that what we rent is licensed this month, but next month it might not be anymore. And when we talk about ownership, I want to remind that ownership is all about control. Who gets to do what with an asset? And as we currently speak, EU law is not promoting this idea. We're not there yet. And I'm happy, in fact, that we are discussing about that because after the Tom Cabinet decision, personally, I was afraid that the discussion was over. and that we're all going to live in a world with no ownership over digital assets. I'm happy that Web 3.0 and Metaverse have emerged 2.5 years after this decision, because this is the new battleground where we need to take this discussion again. And why do I insist so much on ownership? Next to what Jeff said, and I fully agree, to me, personally, to be able to own our digital assets is part of being free. And what do I mean by being free? If I have read a book, the content of which I highly appreciate, it is marvelous, a physical book, that I can lend it to somebody because I can share this idea with them. Under the current digital ecosystem, we don't even have the right to share our digital ideas with others because our books are inside a walled garden, like Jeff put it. And that makes it all the more difficult to share ideas and knowledge. So I think it goes beyond ownership per se, and it has to do with fulfilling our right to the free development to our personalities. And this is a discussion that, I do believe that we need to openly, have. Now, I don't want to close in that, of course, pessimistic note. I know that it is the job of a lawyer always to kill the fun of every party. But I can tell you for a fact that the problem that I have just raised is known to many fellow academics of mine who are also actively discussing it. And in order to close in a positive note, there is not a single crypto event that I have been to and people were not asking me about ownership. In fact, every time the issue of NFTs is being raised, I receive instantly two questions. The first is, are NFTs securities? And that's the question that usually angers me, because people need to understand that not everything blockchain related is a financial instrument or product, right? And the second is, are NFTs ownership? And it saddens me to heart that I have to say no. Because currently, the rights that we get from the NFTs depend, at the end of the day, on the terms and conditions of the NFT platforms. And by being a lawyer, I have developed this annoying habit of reading through terms and conditions. And you can't imagine the nice things that I have seen in NFT platforms. Like the first term and condition that you see in an NFT platform, in a typical one, is that in big letters, you own the NFT. And if you stop there, life is nice. Right, problem solved. But if you do the mistake to go a couple of terms below, you will see that in essence, what they say that you own, you merely license it. Right? And we need to be honest about that. And you might say, okay, that is not a huge problem. We don't have to change our existing property laws. We can regulate that by contract, right? But we all know how well it works when you have a powerful entity on the one end and a weak consumer on the other end. I think it is clear that we cannot trust contract governments when it comes to that. And with that, I stop because I think I overdid it.
Thank you, Ioannis. I believe all the discussions have been really engaging, and I have learned quite a lot today. We're running late, 12 minutes now. So if you have a very final close statement, Leonardo, Dr. Ingrid, and Jeff?
Yeah, very, very quickly. I think, to sum up, I think it was a really great discussion. Thanks again to the Observatory for inviting us. It was really a pleasure. For me, it's just gratifying to hear that there's a lot of alignment across sort of different viewpoints, and we all agree on most of the things that we have discussed. And again, I think that the path towards mass adoption requires that we really think about regulation, because that's also going to incentivize the uptake. So for me, that's sort of the takeaway. Thank you.
Just one more comment, if I can quickly chime in. I echo, of course, everything that the speaker said. There are three more things that I think in a future conversation maybe we can address, because today we focused heavily on governance, which is absolutely important, and privacy, but also transparency and accountability will be very important. And although we talked a lot about regulation, I think we can do a good job before we finalize law to actually give guidelines to commercial entities how to not do things wrong. Although we don't know yet the perfect way how to do things right, there are a lot of good things we can advise companies with just some very simple guidelines to how to not recreate mistakes and how to avoid some of the major troubles. So thank you for the opportunity again, and I'm looking forward to future conversations.
Sure. Thanks. Yes, it's been a great discussion. Very grateful to my fellow panelists, our moderator, as well as for UBOF and our host for inviting us. So, it seems like a number of us are passionate about, the importance of an open versus closed metaverse. And, for those in the audience or who are thinking about or starting to think about these issues, don't assume just because we have some degree of consensus around that it's going to be easy. What's going to be easy and convenient is a Web 2-like experience where a company with the resources like Meta can invest in the technology. And so, to use one of these Oculus devices, you have to log into your Oculus account, which is like logging into a Facebook account. The closed metaverse is going to be convenient. It's going to be offered by big companies. It will not require you as the consumer to do very much. An open metaverse is going to be harder. It's incumbent on the industry and researchers and lawmakers to try to promote that. But it's not as if this is going to happen automatically by itself. People are going to have to work for the outcome. And, I do agree with Dr. Revoldes, with Giannis, that I think a lot of this is very relevant to individual freedom. It's the freedom to participate in the public square. And is there someone who can deplatform you, or are you able to be there without, Mark or Jack Dorsey or whoever being able to make those decisions? It is do you own your digital objects or do you rent them? And I do think as policymakers start to think about this, and it's very interesting what Giannis was saying about the decision 20 years ago. Peer-to-peer does sound a lot harder to regulate and to supervise than something where you have a few big organizations and you can see who the actors are and they know who their responsibilities are. So I think that the type of potential freedom or liberty or ownership in creator economy that an open metaverse would suggest, is not necessarily going to be the easiest thing to regulate, because it won't necessarily resemble the things that are regulated today. And so I think it will require, development of a policy framework and for advocates to speak up and point the risks of some of the paths that might be taken.
Thank you all for your participation. I just want to let you know that if you enjoyed this panel discussion, look forward to our Metaverse report that is expected to be published in the next few months, hopefully much earlier, during summer, and you can learn more about Metaverse. Thank you.
All right, next in the agenda is a fully virtual panel focused on blockchain applications in the energy sector. So I will ask Dr. Ioannis Vlachos to take the floor and moderate the discussion.
Thank you, Mariana. Good afternoon, everyone. Even though it's a virtual panel, we're going to discuss about real use cases and real world problems. I'm happy to have together with me first of all, Jens Strucker, Professor of Information Systems and Digital Energy Management at the University of Bayreuth, and Alex De Vries, founder of the Digiconomy, the platform that constantly keeps an eye on Bitcoin energy consumption. So thanks a lot, both of you, for joining our panel discussion today. And to set the scene, the panel discussion will be about two things. First of all, the energy component inside the blockchain. So how energy consumption of blockchain technology, especially proof of work blockchains, is affecting us. And secondly, to look at the applications of blockchain technology in the energy sector. So my first question is for both of you, in a way to try to introduce to the audience. So could you introduce yourself by answering the following three questions? First of all, how did you get into blockchain? Why you think blockchain plays an important role? And last but not least, what applications that you have been or you are working on are you most proud of? Thank you. We can start with Jens.
Sure. Thank you. And thanks for having me. So what is my background with blockchain, or the beginning? I think it was in 2010 when I was asked as a postdoc at the University of Freiburg in Germany. I was asked to supervise a PhD student, a PhD candidate, and he wanted to write about Bitcoin and monetary policy. And at that time, it was really early, and I said, "Oh, I don't get that with proof of work. Doesn't make sense at all to me at that time." And yeah, that was my rabbit hole. And now I'm co-leading the Fraunhofer Blockchain Lab, and I'm in the energy sector, blockchain energy sector now for really a long time. Yeah, that's how it happened. And why do I think blockchain plays an important role or should play an important role? My perspective and my focus is on energy informatics. And in the energy realm, I see that with blockchain, we can speed up, really accelerate the decarbonization process or the decarbonization of the entire energy sector. And yeah, recently my team and I, we published a white paper with the TSO tenet. And in that we focused exactly on that decisive role of blockchain and other digital technologies, but especially blockchain, for transferring the energy system. So I see that we have to fill a couple of digital gaps here that we right now have in our energy system. And I think we can talk about that. But in the core, it's all about the digitalization of end-to-end processes. And today it's not end-to-end. So that's the reality. Yeah, and I think we had a third one, right?
The project that you are most proud of or you are currently working on.
Yeah, I would say so. One element here really is machine identities and make use of them. So it's SSI, self-sovereign identity plus blockchain, bring it together and make use of them for end-to-end digitalization and, for instance, for integration of energy units like battery, like PV rooftop installation, and then you can switch roles in a very flexible way in energy system. I think we have there's a great need for that. We can talk about that later. And also the other thing is, of course, all the field of CO2 decarbonization and CO2 proofs, that we really can make digital proofs and use them for also decarbonize the energy system. This sounds very abstract, but really I'm totally convinced that this is a valuable contribution to bring blockchain, to bring CO2 certificates to the ground, really within a company, that people can work with that, because that's the problem today. You cannot feel the CO2 value, you cannot verify it, and this would be a very useful contribution, I think.
Thank you, Jens. Alex, your intro?
Yes, thank you. Well, I've been around in the cryptocurrency space since 2014, but I think I really started to establish my presence in 2016, and that was because I read an article back then from a journalist by Vice/Motherboard that said a single Bitcoin transaction is on average consuming as much electrical power as a US household for 1.5 days. And when I read that, that was for me the moment where I was very triggered, because I started to think that sounds like a very extreme amount for something as simple as me sending you money. And I tried to look up some more information about it. I couldn't really find any. Nobody was researching it. And if there was some research, it was already way outdated. Back in 2016, the most recent things I could find were from 2014. And I thought, like, okay, you know what? I think this is something that is significant, something that users of Bitcoin should be aware of. And I wanted to make it transparent that, you know, you had this huge energy cost associated with the Bitcoin system. And that's when I launched the Bitcoin Energy Consumption Index. So that's also the application I'm most proud of. It's not really a blockchain application, but it is about a tracker for the energy consumption of the Bitcoin network. And later on, I added other sustainability indicators to that as well. So not just the energy consumption, but also the carbon footprint of the network, and most recently also looking at electronic waste. And nowadays, not just for the Bitcoin network, but also for other proof of work networks like Ethereum, the second largest, and even a smaller one, Dogecoin, if you've heard of it.
Yeah. Thanks, Alex. Thanks a lot. So my follow-up question to you. So no one can doubt that we're in the middle. If we're in the middle of the summer, we're experiencing a cold crypto winter, as they call it. So how has this affected the energy consumption of the Bitcoin blockchain? And do you believe that this impact will have long-term effects from an energy consumption perspective?
What we typically see is that the energy consumption in the Bitcoin network is very closely related to the asset value. Not just the asset value, it also matters like how much are the rewards that are being paid out to miners. But in general, the key driver of the energy consumption of the network is ultimately the asset value, because if you are mining Bitcoins, you are getting a fixed amount of Bitcoins for every block you create. So a miner a new block will be mined in Bitcoin on average once every 10 minutes, and that block will pay out at least 6.25 Bitcoin. So the higher the price of Bitcoin, the more valuable those rewards are. Can you still hear me, by the way? Your screen froze. Oh.
No, can perfectly hear you.
Okay, great. So like I was saying, the higher the price of the Bitcoin, the higher the value of the rewards going to miners. Now, really simply said, if the price of Bitcoin is zero, miners are not making any money and they will not be able to afford any resources at all. That is really the most simple way you can think about this. And then also, the higher the price, the more these miners are ultimately spending on resources like electricity, because they can simply afford more. Now, what's happened recently is obviously the Bitcoin price has crashed, which has put a lot of these miners in trouble. They simply fell below their break-even point, especially the ones that are running older, less efficient devices. And if you are in a position where your electricity costs are higher than what you're earning from mining, you're going to shut down. So what we see recently is that the price crash is putting a lot of these miners out of business, and we can quantify to what extent this is reducing the energy consumption of the network. And coincidentally, the numbers for my own estimates are not far off from the numbers provided by Cambridge. You may know that the Cambridge University is also providing a source of information on the Bitcoin network, similar to my index, different methodology. But regardless, both indexes show that because of the recent price crash, the energy consumption of the Bitcoin network has gone down by annualized 60 to 70 terawatt hours of electrical energy. So that's per year, annualized number. Which is a massive amount of energy, and the carbon footprint associated with that amount of energy consumption is also quite significant. It would add up to more than 30 million metric tons of CO2 per year, which is by itself 2/3 of our global CO2 reductions by electric vehicles. So just the Bitcoin crash over the past weeks is helping us quite substantially in reducing our global carbon footprint. And if you add the Ethereum network on top of that, it's actually equal to the carbon reductions by electric vehicles. The amount that's now being saved as a result of this crypto crash compared to the situation prior to the crash. And you asked, is this going to last? Well, like I said, it's very related to the Bitcoin price. So it will only last for as long as the price stays where it is today. If I see the Bitcoin price is going up again, so maybe this reduction is going to be very short-lived. If the price is going to double again in the coming weeks, we could be right back where we were prior to the crash. So the opposite is also true. If the Bitcoin price goes down by another 50% from the current level, then also the energy consumption would be going down by roughly half as well. So there is no way I can predict what direction it will go. I can only establish that the crypto crash so far has had a beneficial effect on for the environment.
Thanks, Alex. Really nice and really interesting insights on the Bitcoin consumption. And Jens, coming since you're coming from the academia, but also you also keep an eye on the industry. What is your views on the sustainability of blockchain-based solutions in your sector, that is energy economics?
I mean, I would say in our sector, it's definitely twofold. So there's the perspective, of course, making blockchains greener, of course. So this is about energy consumption, of course. And just yesterday, we had a kickoff, an official kickoff of a new project. We were commissioned by the German Energy Agency, and they said, could you please have a deep look at what are the options? So when it comes to Bitcoin or to blockchain in general and DLTs, people always talk about proof of work and Bitcoin and Ethereum. Of course, there is a reason for that, I know. But on the other side, I mean, if we look ahead, I think there's no doubt that a proof of stake is by a magnitude smaller the energy footprint, the consumption of the CO2 footprint of that mechanism. So it makes a lot of sense to look what can we do instead of that. Yeah. Then we have permission systems in general when it comes to companies who work with blockchains. Often we have a kind of bland or it's a clear permission system there. Then we have permissionless, and of course there we have to decide whether we want to go with a proof of stake or not. So I think one thing is to look to proof of work mechanisms and blockchains in place. How can they transfer their proof of X approach here? I don't think that proof of work really has from my perspective, it's not sustainable, and it's not from an energy efficiency perspective, it's problematic. So it doesn't make sense at all in the long term here. And even if you make it greener or just use green electricity by renewables, still we have the opportunistic cost because we would have the other options to use that energy for. So this is one aspect here, and we can talk much more about where are the options, what can we do exactly, where are the differences. But you asked me what is our focus in our area here in the energy sector, and I said, A, it's the energy consumption. B, this is about a greener blockchain or greener DLTs. But the other side, of course, is what can we do with blockchains, DLTs, to make systems, information systems, and entire economies more green. And I already mentioned CO2 certificates, digital ones. So this is one option. But also to accelerate the decarbonization problem, we really should keep in mind that it's possible to have a very good effect with blockchains to share information. And this means from an economist perspective, this means, okay, what is the effect, the impact on coordination processes in an economy and cooperation processes? And both are strongly affected by the use of blockchain, and we have a lot of examples for that.
Yeah, following up on what you just said, Jens, I read that recently Equity, a blockchain-based crowd balancing platform that is led by Tenet, a leading TSO transmission system operator from Europe, announced a collaboration with your team at Fraunhofer Institute to study the use of SSI, self-sovereign identities. Could you please share with us what is, according to your views, the importance of SSI for the application of blockchain technology in the energy sector?
Yeah, so SSI means self-sovereign identities, and we can talk about that in detail. But the approach, in a nutshell, it's all about I can identify myself, and it's not more like the single sign-on world with all the big platforms who store an identity or attributes assigned to an identity on a big platform on a central basis there. But it's more like you store all your attributes, etc., at one place in your wallet. You know, your wallet could mean on a device, or it could mean it's in a wallet, etc. And imagine that then you use the blockchain just to look up who can on a bilateral way, who can certify, who can verify my attributes, my information here. So from in the energy sector, this is so important because I talked about the end-to-end or the lack of end-to-end digitalization. And with blockchain and SSI in this area, things like crowd balancing platforms or make use of flexibilities of energy facilities, energy units behind the meter to integrate them. You have to do that on a very low cost basis. This is A, and B, it has to be very quickly, and C, from a DSO perspective, from a grid operator, think about a car or an e-vehicle, etc. If you want to make use of that battery, you really have to prove, you have to know as an operator, who is playing there. You have to prove that. Otherwise, it's not possible because it's a critical infrastructure. We all don't want that. But on the other side, if you don't do that, and today we don't do that, right? So it's still not integrated in daily life and daily operations. And if we want to do that, here at that point, SSI and self-sovereign identities, these approaches here with blockchain, this is one, as we think, as TSOs think, it's a very promising way, and we want to walk this path.
Thanks, Jens. And Alex, Jens, let's say, described how an SSI framework, how blockchain DLTs can be used for application in the energy sector. Now, coming from your perspective, from your energy consumption, energy efficiency perspective, how do you see the application of blockchain technology to solve the current challenges of the energy sector as a whole?
Well, I think that you can build anything you want on top of a blockchain, but I think people just need to be mindful about what platform they're building on. And of course, whenever we hear about energy consumption and blockchain, a lot of attention is going to the Bitcoin blockchain and the Ethereum blockchain. But the reality is, whenever you're building applications, you don't have to build on those platforms. You can build on alternative platforms. You can build your own permission blockchain. You have many different design choices, and depending on how you design your blockchain, is not going to be so energy intensive as the Bitcoin blockchain. In fact, you're never going to get anywhere near as long as you stay away from proof of work. So I think that it is important for people to distinct between the Bitcoin proof of work blockchain and other blockchains. Whenever we talk about blockchains in general, because it's something that you have a choice in. And even if you want to use popular platforms, the Ethereum blockchain is actually working on moving to proof of stake as well, which would probably reduce their energy consumption by a factor 10,000 too. So in that sense, like I said, it doesn't have to be very energy intensive, although I should note that in general, blockchain technology was never designed to be super efficient, for the very simple fact that blockchain is about replicating data and processes over many different nodes in a network. So by design, that is going to create some level of redundancy. You're going to have to store the same data on more machines, replicate the same process over more machines, which is always going to be somewhat less efficient than just having a single server do the work. But at the same time, blockchain was invented as a solution for trust. If you have blockchain, then you don't have to trust that single server anymore. So you have to weigh those different things against each other. But in any case, whatever your design is going to be, just stay away from proof of work, and it's not going to be as crazy as the Bitcoin blockchain.
Thanks, Alex. And a concluding remark from both of you. Jens, what you see as the most, let's say, important future opportunity and challenge when it comes to the crossroads of blockchain and energy?
Yeah, so I mean, we just heard from Alex that trust is important. And yeah, as I already said, I think the missing link in the energy system today is trust. So it's behind the meter. We have to prove who's playing there, who can change roles. And then we will see a lot of innovation there, as we already see in pilots, etc. And you work on that, I know, Johannes. So the thing would be use blockchain where it's really can show off, can really show the added value. And for me, this is the missing link in the energy sector is trust and machine identities. So we have to do this in a very efficient, low-cost way, and then we really can accelerate the integration of not only renewables but e-vehicles, heat pumps, etc. And then think about the benefit that is linked to that, because if we know who is playing there, then we can verify processes. For instance, if you look at, it's not all about master data and who's doing what, but it's also about usage data. Yeah, this means we can connect registries to different transaction databases in a very flexible way, because on a bilateral way, there is no need for a central authority to do this, to coordinate, orchestrate that. This means it's not that quick, but we can combine different technologies at that point. And we just did last week, or the week before that, in Germany, the German Energy Agency with us and a couple, 20 more partners, also with the Energy Web Foundation. A lot of companies were involved there. And we showed that it's possible to build a kind of blockchain machine identity ledger to really try to bring different DERs into the system and then change their roles, but in a totally data sovereign way, GDPR compliant, and also in a way that people have a choice there and new market options. And this means integration of flexibilities. And this is very important for the decarbonization of our energy system.
Thank you, Jens. And Alex, your biggest challenge and opportunity you see?
I think a challenge is that, blockchain is probably not a final solution by itself in most cases. So one case that you often hear coming by is, putting carbon credits on top of a blockchain. But then a limitation of that use case is that carbon credits are about, mitigating carbon emissions in the real world, and the blockchain itself has no way of verifying that. That is something that needs to happen outside of the blockchain. So whether or not you are using blockchain, the verification that you're actually reducing CO2 in the real world still needs to be done by a person or some very smart other technology. But in either case, the blockchain by itself isn't going to be the final solution in that scenario. And I think that is going to be the case in a lot of scenarios. But I think that it is not so much a challenge, it's just something to be aware of, that you may have to combine different types of technologies, different types of things in order to make the best possible solution for whatever your use case is.
Thanks a lot, Alex. And thanks again, Jens, for both of you for your participation. And Mariana, thanks a lot for having us, and back to you.
Thank you, Yanis, and thank you very much to your guests. It was the last panel of the day. I want to thank all our physical and virtual participants through the live stream. It was a very nice opportunity to have our work and our topics discussed in front of you so that you can have a general overview of what it is that we are working on. We want to thank the European Commission and DG Connect for hosting this event and for making it possible. And I would like to invite you all to stay for a networking drink outside. Thank you very much for being here. And for those of you that are virtually participating, you can have a drink with us from home. So thank you very much and have a nice weekend.
Bye-bye.